Hello guys, welcome back to a wonderful session for the CMA Intermediate. That's we have named it 100 MCQ series. In this MCQ series, we are going to solve 200 MCQs so that we have guarantee you can secure 30 out of 30 if you practice this again along with some good another conceptual questions, and also the minimum secured guarantee of 24 to 26 marks is there if you attend this or if you watch these classes. So some of the people are attending this live through that announcement, and some of them are going to watch these classes through YouTube. The next 3 hours or 4 hours is going to be a power pack session with a good conceptual clarity, and we have picked the super questions which will test your concepts along with some tricks will be there, some keywords will be there, how to identify that, what you need to do, everything we are going to discuss this. When this is going to be a material which we are going to solve, we have prepared this. So if you want this material to be handy with you, you can WhatsApp me at 9043971982. This is a prerequisite if you want this. So this is completely going to be for financial accounting, and we are also planning for law and ethics, direct taxation as well. These two papers we are planning as there is some time constraint for us. Okay. And then this 200 questions, I want everyone to be kindly attentive to this session. At the end of this session, if you want to visualize it, entire 200 questions should be in your mind and your concepts clarity will be there. Okay, without any delay, we will be starting the session. We have done the session in such a way we have taken by chapter wise. But in your CMA Inter, it would be in a module wise. So we need to change it something like that. No. So we have changed it to chapter wise. So chapter wise, everything chapter wise, we are having a questions. Some chapters will have 10 questions. Some chapters will have 35 questions. Some chapters will have 20 questions. It based on what is need, what is a requisite, we have taken that. So we will starting with the first question. Our first chapter is chapter 1, accounting fundamentals. I want 2 of the people to read the question so that it will be an interactive session. So I want Meera to read that question.
Sure, sir. First question, the accounting equation is presented as?
Yes, this was the accounting equation. Everybody know, we know accounting equation, asset equal to liability plus equity. Equity is nothing but capital, right? This liability or equity in a previous class, I already told to my students, or else if you watch my basics of accounting video, I have tell the word dealer. What is mean by dealer? D for drawings, E for expenses, A for asset, L for liability, E for equity or capital, R for revenue or income. So this is going to be your debit side. This and all is going to be a credit side item. So debit is equal to credit. So double entry system will be tallied. The accounting equations will be tallied. So this asset equal to liability plus equity. This is a one way. So asset remains same, liability remains same. This equity, I can write it this as capital plus revenue minus expenses, nothing but a profit, subtract by the drawings. It is nothing but this entire capital plus revenue minus expense minus drawings is nothing but your closing equity. What is a closing equity? In accounts from incomplete records, you prepare a statement of profit and loss, right? Closing capital, add additional capital, then subtract, add less additional capital, add drawings, and then we will do opening capital, then you will find out the profit. The same thing. Then just interchange this minus drawings will come to the opposite side, and liabilities remains the same, and revenues remains the same, capital remains the same. So expenses will go to the opposite side. So every equation is satisfied. So here your answer is all of the above. Then we'll go for a second question. Read that question.
Which of the following is or are true regarding trial balance?
Yeah, they are asking true. Kindly, I understood they are asking true. What is true? It is prepared for particular period. No, it is prepared for as on particular date. It is not for the period. Next, a trial balance is just a statement. Yes, it is just a statement. Okay. Then the agreement of trial balance is a conclusive proof of absolute accuracy. It is not absolute accuracy. It is arithmetical accuracy. We will only check the mathematical aspects of that thing. We are not going to check the absolute accuracy. We are just going to check the arithmetical accuracy, mathematical accuracy of the books of accounts. All of the option is not valid. So here our option is a trial balance is just a statement. Trial balance is just a statement. Then read the third question.
Which of the following is not a subfield of accounting?
Which is not a subfield of the accounting. That's what they are asking. So the subfield of the accounting, not a subfield. As we know, this is our basics 11th and 12th part. The basics which what we know, not a subfield. Not a subfield means financial accounting is a subfield. Cost accounting, human resource accounting, social responsibility accounting, management accounting. Majorly, these are the 5 subfields of the accounting we will study. In that, they are given management accounting, financial accounting, cost accounting, bookkeeping. Bookkeeping is a part of financial accounting. It is not a separate subfield. So our answer is option D. Okay. Next, we'll move on to question number 4. Read that.
Which of the following errors are not revealed by the trial balance?
Which is not revealed by the trial balance. They are asking not revealed. So first thing is compensating errors. Then errors of commission, wrong balance of an account, wrong totaling of an account. First, let us understand what is a compensating errors. So compensating errors is something which shows errors for that errors we will make. Let's say in a purchase book, we have overvalued that purchase book by putting ₹1,000. Okay. If I overvalue that purchase book, it is showing some extra balance, debit balance. In the same way, sales book is there. I'm going to overcast same ₹1,000 mistakenly. So it will increase my credit balance. So if I see my trial balance on the debit as well as the credit purchase book, it will be 1,000, will got increased. In the same way, to compensate that error, we are committing another error by preparing a sales book 1,000. Here the amount remains the same. Okay, so it will, both the trial balance will get tallied in case of compensating errors. In case of errors of commission, the trial balance will not agree. Wrong balancing of an account, we are committing a wrong balancing in one account. Let's say purchase account is wrong balancing, creditors account we are balancing correct. So the trial balance will not agree. Okay, then wrong totaling of an account, trial balance will not agree. Which of the following errors are not revealed? Which means the trial balance will give a same answer. It means the answer is compensating errors. Then read the 5th one.
The total of the debit and credit side of a trial balance of Mr. Rajiv as on 31st March 2012 were ₹20,000 and ₹10,000 respectively. The difference was transferred to suspense account. On 4th April 2012, it was found that the total of purchase return book was carried forward as ₹1,500 instead of ₹1,400. The balance of the suspense account after the rectification of this error will be.
Good. So this is an interesting question which you can expect this question in your examination. I am expecting. Okay. So whenever you come across like this kind of question, don't read that question completely and move forward practice. Just read the first point, go with the pen to paper approach. Then go for the second point, do that adjustment. Then go for third point, do that adjustment. If I read that, just now I'm reading the question. The total of debit and credit sides of Mr. Rajiv was 20,000 and 10,000. What I will do? I will put debit side, I will put credit side. Debit side is 20,000 and credit side is 10,000. Completely fine. The difference was transferred to a suspense account. What is the difference? Difference is 10,000 on the credit side. It will be transferred to the suspense account. Then we have transferred the 10,000 to the suspense account. That's what done. Then 4th April 2012, it was found the total purchase return book. First, I need to identify which balance it will show. Debit balance, credit balance. It will show a credit balance, right? Purchase return book will show credit balance. Purchase book will show debit balance. Was carried forward 1500 instead of 1400. Actually, I should put 1400. But what I have done, I should credit 1400. But what I have done, 1500 I have credited. Okay. So how much I have put extra? 100 rupees I have increased that. So what I need to do, that 100 rupees, the balance of suspense account after the rectification, previous balance was 10,000. Currently now the balance was 100. So it will become 10,100. So my answer is option D. Next. Question 6.
Mr. A purchased a machinery costing rupees 1 lakh on 1st October 2011. Transportation and installation charges were incurred amounting rupees 10,000 and rupees 4,000 respectively. Dismantling charges of the old machine in place of which new machine was purchased amounting rupees 10,000. Market value of the machine was estimated at rupees 1,20,000 on 31st March 2012. While finalizing the annual account, A valued the machinery at rupees 1,20,000 in his book. Which of the following concept was violated by A?
So, fine. They have given everything. They have given 1,20,000 as a market value. They have recognized as market value. So first we need to identify the cost. What we need to identify the cost? The purchase cost we will identify. So first one is 1 lakh. That's the costing of the machine. Then installation charges 10,000 and 4,000 respectively. Then dismantling of that old machine in place of a new machine, that's around 10,000. So totally it is going to be 1,24,000. Okay. This was the cost. So the market value of the machinery was estimated to be 1,20,000. The finalizing of the account, the value of machinery is to be recognized at 1,20,000. So they have recognized at the market value. So this is the cost. Whenever it is in case of asset, and I will also give you one key point. Whenever the company or an organization or a sole proprietorship is a going concern, that's what the one case. If it was a going concern, we will use cost concept, cost approach. If it is for not a going concern, if it is not a going concern, we will go for net realizable value. What is a saleable value? That's what we will recognize in our books of accounts. Here the question remains the same. We will assume the company is going to be taken forward. So if we assume a going concern approach, always the asset should be valued at historical cost. So which concept is violated? The cost concept is violated. The answer is option A. Then read the next question.
If a purchase return of rupees 84 has been wrongly posted to the debit of the sales return account but had been correctly entered in the supplier's account, the total of the trial balance would show
the purchase return of 84 as wrongly posted to debit of sales return account but had correctly entered in the supplier's account. The total trial balance would show. That's what the question. A purchase return, okay, will show 84. Okay, which is purchase of 84 has been wrongly entered as sales return as 84. But the supplier's account, the creditor's account has done correctly. Okay, creditors accounts has done correctly. So what we will do, this purchase return we have wrongly recorded in sales return. Sales return we are having a debit. So that debit we are having 84 rupees is already recorded. That we need to rectify. And then you are having a purchase return. That purchase return we need to do by already the purchase return will be credited. Now you will reverse it to make it better, to reverse the rectified entry. So you will debit it again by 84. So total it will be 168. This 168, the debit side is to be 168 more than the credit side. That's what your answer. So option D is your answer. Then question number 8.
An increase in which of the following account will be recorded on the debit side?
In an increase in which of the following account will recorded on the debit side. So it is merely about debit side. Debit aspects, we are only concerned about drawings, expenses, and asset. So we are going to check that account itself. Okay, rent received is an income account. Building is an asset account. Bills payable is a credit side. That is a liability account. Capital is a liability account. In simple debit side, DEA, drawings, expenses asset, which is an asset. Building is an asset. So we will go with option B. Next.
While finalizing the current year's profit, the company realized that there was an error in the valuation of closing inventory of the previous year. In the previous year, closing inventory was valued more by rupees 50,000. As a result,
That's what the question they are asking. Whenever you come across with this question, do a simple trading account. Whatever you understood, simply put one opening stock, let's say 10,000. Then put purchases of somewhere around 20,000. Put sales around 50,000. Then closing stock, actually, it should be 80,000. Okay, actually, it should be 80,000. Quickly, you will do. Okay, 1,30,000 is the value. So if I identify my gross profit is 1 lakh, that is an actual. Okay, when you come to this part, when the previous year closing inventory was valued more than 50,000, right? So in the same trading account, all the values remain same. This remains, this remains, this remains, everything remains same. Opening 10, purchases 20, sales 50. Then in closing, instead of 80, I valued more by 50,000. So it is going to be 1,30,000. Okay, if it is 1,30,000, it's going to be 1,80,000. It is going to be 1,80,000 if you balance, and 30,000 is over. It is going to be 1,50,000. This 1,50,000, previously it was 1 lakh. Now gross profit has increased. Okay, gross profit has increased. This is for the previous year. Previous year, this should be an actual, but in previous year, we have committed a mistake. Okay, how it will affect the current year? Because previous year closing stock is current year's opening stock. So this opening stock 1,30,000 will come. Okay, 1 lakh, or wait, we will do that. Or if you want more clarity towards it, yeah, correct. Opening stock, here we will do 1,30,000, then purchases 20, sales 50. Okay, sales 50. If you identify, suppose let's say your gross profit, then here it will be your gross profit, we will put somewhere around the value of the closing stock we are having, and the gross profit we will put, actually it should be, actually it will be your value of where I have, if I want to give you one more example towards it. What will happen? Suppose if I record the closing stock here, the opening stock, if it was closing stock on the credit side has got overstated, my profit will be, gross profit will be overstated. Suppose if the same credit balance now come to a debit side of 1,30,000, my closing stock, whatever the current year closing stock, I will value. Okay, whatever the current value, let's say that my current year closing stock, it's somewhere around 2 lakh. That's what value it is correctly valued. Okay, here the important point is this closing stock and current year opening stock. That's what the key point here. So now here, if I put 2,50,000 over there, if I put 2,50,000 over there, then 1,50,000 is over and it remains 1 lakh, because here I committed a mistake of 50,000 overvalued. In credit side, if I put as an credit item, my gross profit is going to increase. If the same situation happens, vice versa, if I put it on the debit side, what will happen? My gross profit is going to come down, because here you are mistakenly recorded 50,000 extra. Okay, actually it should be what? The opening stock, if you rectify that, it should be only around 80,000. Then purchases should be 20,000. Sales should be 50,000. Now current year closing stock, let's say you are having 80,000. Okay, current year closing stock, you are having 80,000. So totally it was 1,30,000. then 1,30,000. 10,000 is gone. So 30,000 will be there. So what you need to understand, whenever to conclude, whenever you come across with this question, like closing inventory, whenever closing stock is overvalued, that is overvalued, your gross profit will increase. Whenever closing stock is undervalued, gross profit will decrease. Whenever opening stock is overvalued, gross profit will decrease. Whenever opening stock is undervalued, gross profit will increase. If you understand this logic, it is going to be easy. Whenever it comes to not closing inventory, we can put it as inventory. Everybody understood? Shall we move on to next one? Read that next question.
The cash book showed an overdraft of rupees 1,500, but the passbook made up to the same date showed that check of rupees 100, rupees 50, and rupees 125 respectively had not been presented for payments, and the check of rupees 400 paid into account had not been cleared. The balance as per the passbook will be.
The balance as per cash book is given. That is showing a credit balance, overdraft balance of 1,500. Fine. Our point is balance as per passbook is our end point. Okay. Some point is going to be our answer. The date shows the same of the check 100, 50, 125. If you add 100 plus 50 plus 125, what is the value? 275 is the value. NT 275 respectively had not been presented for payments. Payments is nothing but in cash book, you have recorded the entry on the credit side. But in the passbook, the entry is not there. You need to put that entry. So you will debit it by 275. Okay. Then 400 paid into the bank had not been clear. Here, paid into the bank is not like you are paying it to other person. It is like you are depositing a check, which you need to withdraw your own money to put it in your bank account. You are paying that check. Okay. So in cash book, it is a receipt item. So the cash book, you are having a debit side entry, but in passbook, you are not having credit side entry. So you will credit by 400. So you will credit all this 1,500 plus 400 will give you 1,900. If you subtract 275 from that, you will get 1,625. 1,625 is your answer. Option C is your answer. Then read the next question.
Which of the following not an error of principle?
What is error of principle? First we will understand. Error means treating that basis itself is different. Like let's say I am treating a capital expenditure as a revenue expenditure. What is an example, sir? The example is, for example, let's say purchase of machinery posted to purchase account. It means purchase of machinery is an asset item. It is a capital expenditure. Posted to purchase account means it is a revenue expenditure I am making. So purchase of machinery is a capital expenditure. I am treating it as a revenue expenditure. It is an error of principle. So we will see. Purchase of machinery debited to, they are asking not an error of principle, which is not an error. That's what they are asking. Okay. It means which is a correct thing. Purchase of machinery debited to purchase account is an error of principle. Sale of old furniture credited to sales account. Sale of furniture is credited to sales account. The nature itself is capital receipt, revenue receipt. The nature itself is wrong. So it is not an answer. Repairs on overhauling of an existing machinery debited to machinery account. No. Of an old existing machinery, overhauling expenses should be treated to that revenue account. So here the answer is cash received from Rana posted to Jana. In simple, I am just cash received from Rana. What is the entry? I am receiving from cash. So cash to Rana. That's what the entry is. What I am doing, instead of putting Rana, I'm just posting to Jana. Both is having a credit. There is only a name change. It is only affecting that account, but it will not, it only the person will be affecting. It is not the entire value. Okay, the person remains the same. The treatment of accounting remains the same. So my answer is option D. Next.
A buyer returning goods on the ground of poor quality sent a note along with the goods stating that no payment would be made in respect of goods returned. The return note is called.
Super. Whenever this kind of question is going to come, hereafter you are going to remain accurately correct if you find out the words. Let's say there will be a person X, there will be a person Y. X is sold goods to Y. Okay. At that time, for rupees 10,000, let's say, at that time, in the books of X, what is the journal entry he will pass? He will simply pass Y to sales. Correct? Let's assume the goods are sold on credit basis. Okay, then only the person account will come. Y to sales. Whenever Y, it's from a point of view of the purchaser. For Y, it is a purchase. What he will do? Purchase to X account he will pass in his books. Due to some deficiency, he is returning the goods. Who is returning the goods? The buyer is returning the goods. He is a seller. Y is a buyer. He is returning the goods. So how much? Let's say worth of 1,000 rupees is returning. So Y is returning. At the time of returning, Y, which entry, what entry Y will pass? X2 purchase return. X2 purchase return. What entry X will pass? Sales return to Y. Okay. They are asking what? Buyer returning the goods is sent no payment would be made in respect of goods return. The return note is called. Fine. We are buyer. Whom we are debiting while returning the goods. We are debiting that X person, right? We are debiting it. Okay, debiting it. So we will give them a debit note. Then from Y's point of view, suppose that is a creative question they are asking. Sellers returning, the sellers accepting the goods and seller is giving a return note. At the time, the seller is credit the Y account. So it will be X will send to Y note called credit note. Understood? Here now you will tell me what is your answer. Debit note is your answer. Fine. Then go for question number 13.
Going concern concept is not followed in.
What is a going concern concept? Company will go on forever for some particular time or in a foreseeable future, the company will go. So if not followed, bank maybe will follow going concern concept is not followed. Cooperative societies, they will follow. Depreciation accounting, they will follow. Joint venture, it means it's for temporary purpose. So we are not following a going concern concept in joint venture accounting. Then question number 14.
Convention of conservatism takes into account.
Convention of conservatism takes into account. What is conservatism? Make accounting treatment for all possible losses and don't account for future profits. That's what a simple statement for conservatism or a prudence approach. So all future profit and losses, no, future profit and losses is not there. Neither profit nor losses is also not there. All future losses and not profits. Yes, this is a correct option. All losses we will record. Then all profits we will not record. All losses we will record. Then read question number 15.
Rectification of which type of errors requires opening of suspense account?
Which type of errors requires of opening a suspense account? Suspense account is nothing but one-sided errors. Okay, whenever the errors is occurred, one-sided errors will open a suspense account. The error of principle is that completely it is different. Okay, treatment of purchases as treatment of sales, purchase of treatment entirely asset as a revenue, everything will differ. So the opening of suspense account, error of principle is a double-sided error. It is not required. Then complete omission, I have not at all recorded. Then that also suspense account will not comes to a picture. Partial omission, recording purchase account only, not recording the creditors account. I am crediting only the sales account. I am not debiting the debtors account. Then it is a one-sided error. So suspense accounts will come. Then error of commission also, sometimes suspense account will come, which is truly correct, which is accurately 100% correct. It means partial omission. So we will go with partial omission. Read that question number 16.
Which of the following is not a qualitative characteristic of accounting information?
Which is not a qualitative characteristics. If you come across this qualitative characteristics, there is something known as understandability, reliability. Okay, understandability, reliability, comparability, relevance. Whether it is understandably, whether it is I can believe it, whether I can comparable it, whether the given information is everything is relevant to that accounting information. That's what the qualitative characteristics. URCR. That's what you need. So here reliability, materiality, comparability, understandability is there. Here the unknowing part, who is a culprit here? The materiality is a culprit. So they are asking not a qualitative, materiality is not a qualitative characteristics. Then question number 17.
Errors are
Errors are very simple. They are given errors. Frauds, unidentified mistake, intentional mistake, unintentional. So they are identified as a mistake. When you come across this mistake is divided into two. One is intentional mistake. I am done it voluntarily. Next one is unintentional mistake. Okay. If it is an intentional mistake, it is fraud. If it is an unintentional mistake, it is an error. Okay. Then from that, what will identify? Errors. Errors are unintentional mistake. Option B is my answer. Shall we move on to the next one? Question number 18. Yes.
in a cash book debit balance of rupees 112 brought forward
Yeah,
as
wait. What we will do, we will just read the question. We will do pen to paper mode. Then we will read the question. We will do, and quickly at the completion of a question, we will easily find out the answer. Okay. First read that.
in a cash book debit balance of rupees 112 brought forward as credit balance of rupees 121. While preparing a bank reconciliation statement, taking the balance as per cash book as the starting point.
As a starting point, what I need to do. Okay. Actually, cash book 1112 should be debited. What I have done, I have taken as 121. Now I need to rectify this mistake. Okay. Now I need to rectify this mistake. If I want to rectify this mistake, I need to put it on the debit side. Put it on the debit side. So that is 121. I will put it. So it will be 112. I should record it. But what I have done, I have recorded 121. Now I should cancel this. Whenever I will debit the value, then only this will get cancelled. Only 112 will be there in my books of accounts. So whenever you come across, so here it is 112. Previously, I have credited 121, wrongly carried forward as a debit balance here. Here it is a credit balance. So to cancel this, we will debit it by 121. So if we cancel, it will get cancelled. If I debit it, instead of one crediting, we will do one debit. So it will get cancelled. If we add this, add all the item, 112, take a calculator, 112 and 121 will give you 233. So 233 rupees value I should add and I should put it in my books. Then only it will rectify to have my 112 value. So my starting point of balance as per cash book is a starting point. So my value of 233 should be added. So my answer is option C. This kind of question you can expect in your examination. Then question number 19.
When stock is valued at cost in one accounting period and at lower of cost and net realizable value in another accounting period.
That's what they're simply given which concepts they are while. That's what the prudence concept conflicts with consistency principle. Yes, that's a main thing. Because here the thing is the stock should be valued at year-on-year basis at the way of lower of cost or net realizable value, whichever is lower. Here the prudence concept conflicts with the consistency principle. Consistency means we need to follow same accounting for every year. That's what the thing is. Prudence is something, but we should value for value in the way which possible for all future possible losses, and we should not account for all estimated profits what we are need to book it in my books of accounts. That I should not put it in my books of accounts. That's what the thing is. So the prudence concept conflicts with the consistency principle. Here I want to clarify one more thing. Whenever you come across with AS2 or inventory valuation, at the time always you should remember inventory should be valued at lower of cost net realizable value, whichever is lower. Here the point is many of them put the word or over here. Cost or net realizable value, whichever is lower. That is completely wrong. As per AS2, it should be cost and net realizable value, whichever is lower. This may be helpful for you in final accounts, in some MCQs, basic MCQs, it will be helpful for you because as per AS2 is not there in paper number 6, that is financial accounting, it is not there. Actually, previously in old syllabus, it is there. In new syllabus, they have removed that AS2. So AS2 is not there. So you will make sure you are keep this point in your mind. Okay. Next, 20.
Materiality principle is an exception to the
Is an exception. What is a materiality? We will disclose what is materially affecting that accounting. That what we will usually disclose. Because it is an exception, it is not an exception to consistency principle. It is an exception to fully disclosure principle. Because in fully disclosure, we need to disclose everything. But in materiality, we will disclose the some part of effect which is affecting that. That disclosed fact only we will disclose. So here the answer is option B, full disclosure principle. Then
purchased goods from Mr. R for rupees 3,600 but wrongly recorded as rupees 6,300 to the debit of Mr. R. In the rectification entry, Mr. R's account will be credited with.
super question. This is an interesting question which will test your conceptual clarity regarding rectification. First point you will do purchase good for Mr. R, which is a journal. What is a journal entry? Purchases to Mr. R. What is the amount you will pass? 3,600, 3,600. But wrongly recorded as 6,300 to the debit side of Mr. R. It means purchase account is still there on the debit side. Instead of crediting Mr. R, is debiting the Mr. R by 6,300 rupees. This is my correct entry. What is my wrong entry? Wrong entry is purchases 3,600. R account 6,300. This is a wrong entry. What we will follow? Reversal of wrong entry. What is the reversal of wrong entry? 2 purchases 3,600. 2 R account 6,300. So now I'm going for a rectified entry. Now I'm going to compare this CE with RWE. This is going to be irrelevant now because we are reversal that wrong entry. So what we will do? In credit purchases is gone. In debit purchases is gone. What remains is there? R account on the credit side 2, 3,600 is there. 2 R account 6,300 is there. They are asking to Mr. R account, what is the amount you will credit? 3,600 plus 6,300. If you add, it is 9,900. So my answer is option A. Understood? Shall we move on to next one?
Dash concept assumes that the infinite life of an organization can be split into smaller period of equal duration.
Let's say I'm assuming my company is going to be for infinity years. I don't know when I'm going to close the company. Okay. I may not be the person who is going to prepare the account for 1,000 years or 100 years or let's say 50 years. I need to prepare accounting for every year on basis. So I will basically put that infinite years into basic of 1 year, 1 year, 1 year once. So that period is known as an accounting period. Basic question, but it will be a something. Many of them will commit a mistake on that question. Next.
The book of account which records only those cash transactions which are not of heavy amount, but the type of transaction is frequently entered into by an entity is.
Very simple. The keyword is not heavy amount, which is not a heavy amount. We will basically follow in a petty cash book. What is a petty cash book? Basic objective. Because I don't want to day-to-day expenses. You don't want to come to the main accountant to ask you daily 50 rupees, 10 rupees, 20 rupees, 40 rupees. This is all going to be hectic for us to prepare. So what we will do, we will put one person as a petty cashier. We will give you 10,000 to 15,000 monthly on monthly basis. Whatever the petty expenses on day-to-day basis, you need to take care. You will take care of this. Don't come to us. At the finally, give that report. What is the petty expenses which you make? I will put it in my trading account or I will put it in my P&L statement. Okay, so which is not a heavy amount, which is equally simply known as petty cash book. My answer is option B. Then
the accounts related to expenses or losses and incomes or gains called
losses and expenses, losses and expenses or income and gains are called, basically as per the golden rules of accounting, it is divided into personal account, real account and nominal account. Under the nominal account, we will record losses and expenses and incomes and gains. So it will be nominal account. Next. As
which
it
of the
is,
following?
wait. I want to clarify on this. Personal account, we will only record related to that person. Or let's say it is an artificial person, bank account, company's account, firm account, personal account in the sense it is a debtors account, creditors account, that separate person account. Representative personal means in a person which we need to represent and we need to pay. Let's say I need to pay a salary to other person. So I am not yet paid. So I will record the entry as salaries outstanding account. Like that I will prepare. So that is known as representative personal account. Real account means whatever comes to you, you will record it. Whatever is not, let's say it is an asset account, machinery account, everything will be there in real account. Okay, so the answer is nominal account. Next.
Which of the following transaction is of capital nature?
Is of capital nature, they are asking. What is a capital? Commission on purchases. No, commission on purchases is what? Revenue item. Cost of repairs is a revenue item. Cost of repairs is a revenue expenditure. Commission on purchase is a revenue receipt. Rent of factory is a revenue expenditure. Wages paid for installation of machinery. This wages, which is committed to install that machinery, we will inclusively record it in the machinery. We will charge it to that cost of the machinery itself. So it is a capital in nature. My answer is option D. Next.
A resource owned by the business with purpose of using it for generating future profit is known as.
It is an asset definition. Asset is nothing but a resources owned by the business, which is a purpose of using and generating a future economic benefit or a future profit. That is known as an asset. So it is an asset definition is given. So we will directly go for an asset.
At the end of the accounting year, the capital expenditure are shown in the.
At the end of the year, very simple. Whenever you come across with trading account and P&L account, balance sheet, you will record on the debit side. You assume it is going to be record only on the expenditure. In the credit side, you are only going to record the income, right? So in the debit side, in trading, you will record direct expenses. Here, you will record indirect expenses. In income side, you will record direct income, that is sales. and here in the P&L you will record indirect income. Okay, here if you see whatever the items I am recording on trading, whatever the items I am recording on P&L, everything is in ratio of revenue expenditure. Here it is revenue receipt or revenue income. Okay, revenue expenditure and revenue receipt. In balance sheet, whatever the capital expenditure I am committing, let's say I am purchasing an asset. What is entry? It is an expenditure first in the nature of capital, which gives me is going to generate the more profits to my entity. So it is going to be capital expenditure on the asset side and capital receipt on the liability side. Here the question is capital expenditure at the end of the year are shown on the asset side. So my answer is assets of the balance sheet. Suppose they may create a different question. They simply taken the word expenditure and they have inserted the word receipt. Then your answer will get changed. It is liability sides of the balance sheet. Okay, suppose they have taken the word capital and insert the word revenue, it is going to be debit sides of the profit and loss account. Suppose they keep the word revenue and they have extract the word expenditure. Instead, they are putting the word receipt or they are putting the word income. It is going to be a credit sides of the profit and loss account. This is an interesting question which will test your conceptual clarity. For this, in this one question itself, you can able to generate 4 additional questions. That is 3 additional questions you can generate. So be careful on this kind of question. Next question number 28.
Chandru's and Co's account is a
Chandru and Co's account. Let's say it is simply we are having that person. Chandru is a person having a partnership firm and he is having a separate bank account. That separate bank account or that separate person, we will treat them as an artificial person created out of law. So here the answer is artificial person. Basically, as we have already discussed, it is divided into 3. One is personal account. In personal account itself, it is a natural persona, artificial persona, or representative persona we will see. And then only we will go for real account and then only we will go for nominal account. So here the answer is artificial personal account. Next.
purchase of a laptop for office use wrongly debited to purchase account. It is an error of.
It is an error of. What is the journal entry you will pass for purchase of laptop? It is going to be laptop to cash. But what I have done, debited the purchases account. Cash I have credited correctly. But what I have done the nature, instead of putting in my laptop, what I have done? I have put it in my purchase account. Okay, it is an error of completely. Laptop is of capital nature. Purchase is of revenue nature. Revenue expenditure. Completely it has changed my principle. So it is a error of principle. Option C is my answer. Then
Which of the following book is both a journal and a ledger?
very good. Interesting question. Confusing question. This and all what we say, no, this is a confusing question for the students. Okay. So whenever you come across with, the option is going to be only books, right? The books is nothing but purchase book, sales book. Purchase return book, sales return book. Bills receivable, bills payable. Journal proper. The nature of this, everything is only credit items will be recorded. Okay. Suppose if I want to put my purchases in my trading account, I first need to prepare a purchase account. After preparing a purchase book, this purchase book balance will go to that purchases account as it is a credit nature. Credit nature will be recorded separately and cash nature will be recorded separately, and then we will give that value. Then we will put it for a carry down value. Then we will put it the brought down value. We will find out the answer. So it is not purchase account is a ledger. Purchase book is only a journal. It is not a ledger. Okay. The one of the best thing is if I identify that subsidiary book apart from this cash book. In cash book, what we will do? We will record those only cash transaction. Purely a cash transaction. When we record entirely purely a cash transaction, the necessity of preparing a ledger is not required, because all the transactions already recorded in a cash book. So I will treat that cash book as a journal and as a ledger as well. So both the things will be treated only in the cash book. In none other book, it is going to be treated as journal as well as the ledger. It is only a journal if it is in case of purchase book or sales book or whatever the bills receivable, bills payable, or a journal proper. So the answer is cash book. Next.
Original cost of a machine is rupees 1,50,000. Residual value of rupees 10,000. If depreciation is charged at 10% per annum under WDV method, then depreciation for third year will be.
Depreciation for the third year. It's a best question. Third year, I will give you two types of method. Method one, you will go with the pen and paper mode. Okay, pen to paper. Method two will go with a calculator. Okay, you are going to find the answer for any number of years easily. Okay, what we will do, first we will find out the cost. Cost is nothing but after subtracting, the depreciation should be subtracted from the residual value. Cost minus residual value, that is 140 will be there. Okay, so from that value, what we will do on that, let's say the residual value they have given, their percentage is already they have given, right? So what we will do, we will go with 1,50,000 into 10% minus equal to into 10% minus equal to into 10%. So here, if I want to say pen to paper mode, the cost is rupees 1,50,000. From that first year depreciation at 10% is gone. Calculate 10%, it is going to be 15,000. So if I subtract, it is going to be 1,35,000. It is a starting of the year. At the end of the year, of the second year, I'm going to charge again 10% as it is on 1,35,000. So as it is a WDV method, so on 1,35,000 into 10%, if I charge, it is going to be 13,500. If I subtracted it, I will get an answer 1,21,500. This is my third year. At the end of the third year, I need to again charge 10%. So if I charge again 10%, it is going to be 12,150. This is my third year. What is my third year? They are also asking third year. That is option C is my answer. This is one way. There's an alternative way. You can do it in a calculator without taking pen and paper. So what you'll do, take a calculator and press 1,50,000. Take a calculator and press 1,50,000 and then multiply by 10%. Multiply by 10%. You will get 15,000. Simply press, this is a first year depreciation. Simply press minus equal to. Simply press minus equal to. You will get 1,35,000. This is a second year opening value or second year at the end of the value. We need to chart that value again 10%. Again, what you will do, into 10%, you will get 13,500. This is a second year depreciation amount. Now what you will do, again same process, minus equal to, you will get 1,21,500. From that, again multiply 10%. Now you are in the third year. What they are asking, 1,2150 is a value. So that's a third year depreciation we will identify. Suppose in this alternative question, what is the asset value at the end of the third year? Suppose if they ask, what you will do? You will put minus equal to, you will get that value. Then we'll go for next question.
Provision for doubtful debt on 1st April 2021 was rupees 13,000. During the year 2021 to 22, the bad debt was rupees 9,500. The sundry debtors on 31st March 2022 were rupees 3,25,000. Provision is to be made at 5% on debtors. If on 31st March 2022, there was an additional bad debts of rupees 2,500, then provision for doubtful debt will be.
Yes, interesting one. I will give you one statement, how you need to prepare. With that approach, you can easily do it. Okay. First, I will take my old P. I used to write PDD, provision for doubtful debts. Okay. That is 13,000. This is what the as on 1st April. Okay, this is a old PDD. Then or else I want to here I will write it. Okay, this is your old PDD. Next, during there, this is what's old bad debts. Sundry debtors, this is a closing sundry debtors. Provision 5% is a new PDD. New provision we need to make. Additional bad debts is given. The statement will be, first I will record my bad debt. Then I will add my further bad debt. Then I will record my new provision PDD account. I will record this value, all the three value. From that given value, I will add all the value. Okay. Then I will subtract my old PDD, old provision for doubtful debts. Whatever the value comes, I will do that process. Sure, give me that value. What is a bad debt? First original old bad debt, 9,500. What is a further bad debt? Further bad debt they have given 2,500. How you find the new PDD? That's I will give you the trick. How you will find the new PDD? What you need to do? From the new PDD, take the sundry debtors value, 3,25,000. From that, subtract the further bad debt. Don't subtract the bad debt. Bad debt is already gone. Okay, already is there. Already adjusted value. But further bad debts is now only identified. That 2,500, you will first subtract it. Okay, so 3,25,000 minus 2,500. If you subtract, you will get 3,22,500. This is an existing sundry debtors which I want to expect on the charged 5% into 5%. Into 5%, if you do, you will get 16,125 is a value. So you will put 16,125 here. Okay, if you add all this plus 9,500 plus 2,500, you will get 28,125. From that old PDD, as you know, it is 13,000. Subtract 13,000. Okay, minus 13,000. We will get 15,125. So 15,125 is the answer. So I will debit my P&L I will debit my P&L by 15,125. Okay, 15,125 is the value. Okay, I will give you one more trick here. Suppose here, old PDD. Okay, old PDD. Let's say it is 30,000. Let's say it is 30,000. Okay, from 30,000, you will subtract 28,125. You will get 1875. At the time, you are having that value as a negative. So you will credit that value. Okay, credit in the P&L account. It is already I'm having a old provision. Why it is necessary to create a new provision? So I will create it to the credit sides of the account. Okay, next question number 33.
Which of the following statement is not correct?
Is not correct. That's what the question is. Okay, bad debts can be less than the amount of provisions of bad debts. Yes, it can be. Okay, bad debts can be more than the amount of provision of bad debts. Yes, it is also right. Okay. Yes, bad debts can be more than the provision of doubtful debts. In the next year also, I can get it. Provision for doubtful debts account is the amount payable to the debtors. It is we are creating a provision which we are estimating a future losses, so that we are creating a provision here. So it is not payable to debtors. At any point of time, it is not payable to debtors. So my answer is option C. This is not only the correct option. This is true. This is true. And provision for doubtful debts is shown in the balance sheet. True. This is only a false. So not correct is nothing but your false. Which of the following is false? That's what the question is. Next.
Main elements of the accounting equation are?
We know very simple. What is the main elements? Asset, liability, capital. That's what the asset equal to liability plus capital. That's a simple thing. So we will go with option C. Next.
Choose the most appropriate one from the given following alternatives. Select the correct statement.
Which of the statement is true? That's what the question is. Okay, most appropriate. Okay, which is mostly correct. Keeping systematic recording of business transactions is not a function of financial. No, it is a function of a financial accounting. Okay, this is false. Accounting is concerned with monetary transaction. Yes, it is concerned with monetary transactions only. Accounting is concerned with past as well as future events. No, a business and businessman are the same identity for the accounting period. No, business entity concept will come. Business is different, the businessman is different. So here the answer is option B is your answer. With this, we have successfully completed the chapter 1. I think we have taken almost 1 hour of time simply for this 35 MCQs. So if you feeling this want to be a lengthier video, so you can watch this video at 1.5 speed or 1.25x speed, so that it will be a time saving for you. This videos which will be helpful one day before your exam or on the exam day in the morning when you are traveling from your place to an exam center, which is from, let's say you are from Neyveli or you are from Kadlu and you are writing your exams towards a Pondicherry or whatever the states you are traveling to some other place on daily basis. At that time, if you have your headphones and if you just looking into the classes, it will be helpful for you to secure this 30 out of 30. Okay. So now we will going for chapter number 2. Another interesting, I have handpicked that bills of exchange question. So give a interesting, give an attention towards this. Read that question number 36.
A draws a bill on B for rupees 30,000. A wants to endorse it to C in settlement of rupees 35,000 at 2% discount with the help of B's acceptance and balance in cash. How much cash A will pay to C?
Yes. Let us understand. A sells some goods and B. A is draw a bills of exchange, bills receivable. B is getting 30,000. A is having another liability. C, he need to from A need to receive from B. A need to receive from B and A is having another liability to pay to C. Okay, so here that 30,000 bill for C, I need to pay 35,000. But I am having only bill worth of 30,000. So what I will say, CC, I will pay you 30,000 bill of what? You will take this bill. Then remaining 5,000 is there. So for that 5,000, C will say that you will give me a 2% discount. So what is a 2% discount? On that 5,000, you will charge 2% discount. What is a 2% discount? What they have given. With the help of B's acceptance and the balance in cash, how much A will pay to C? That's what the thing is. Here, this 2% you should calculate on that whatever the value I need to pay. I need to pay 35,000, right? On that 35,000, calculate what the percentage they are asking, 2% discount. That's what the cash discount is. On the purchase value or on the invoice value, we will calculate the cash discount. That cash discount is 2%. Calculate 35,000 into 2%. What is the value you will get? 700. If you subtract, you will need to pay 4,300. So my answer is option A. My answer is option A. Then go with question number 37.
X draws a bill on Y for rupees 20,000 for 3 months on 1/1/2010. The bill is discounted with banker at a charge of rupees 100. At maturity, the bill returned dishonored. In the books of X for dishonor, the bank account will be credited by.
In simple, X will draw a Y on bill. So what you will do? X will pass a journal entry for bills. What you will do? Bills receivable to Y for 20,000 rupees. Okay, this was the first entry he will pass. In the second entry, the bill is discounted with the banker at the charge of 100. So he's going to get a cash. So at the bank, he will pass 19,900. At the discount, he will pass 100. Two bills receivable, he will pass 20,000. This was the second entry. At the time of due date or at the time of maturity of the bill is got written. Why it is got written? Because it is usually dishonored. What they will do, you need to pass a reversal entry. What do you need to pass a reversal entry? Entirely the bill is got dishonored. What I will do, total bank account. Now it is completely going to be bank account. Entirely I need to do bills receivable, entirely going to commit as my 20,000 value of bills receivable. At the time, entire banking account, 20,000 I am going to credit it. So my answer is option B. Because whenever it comes to a point of view of dishonor, all the value, I need to repay my 100 rupees. Whatever I committed, whatever the bank has taken 100 rupees as a discount, that the entire value is going to be given back. So my credit account, it should be 20,000. Then I will give you. Previously, it was bank 19,900. Okay, bank account. Now you are putting 20,000. The balance of 100 is there. No, that 100 is actually a loss for me. That 100 is actually a loss for me because the bill has got dishonored. Already you need a cash. Already your bill got dishonored and you taken. Already you will get discounted and you will get a cash of 19,900. Now the bill has got dishonored. I will give you the entire bill. You will take the 20,000 bill. That's it. So the bank will credit the 20,000. So the entry will be bank account 20,000 will be there. So option B is your answer. Then question number 38.
On dishonor of a bill of exchange that has been discounted, noting charges are initially paid by.
This is an interesting question which many of them will commit a mistake over here. On dishonor of the bills of exchange, the bill is got discounted. Now, with whom the bill is there? The bill is there with the bank. After discounting means the bill is with the bank. Noting at the time of when the noting charges will be paid when the bill is got dishonored. Okay. Noting charges will be paid to notary public. Who is paying the notary? Actually, the noting charges are to be paid by the holder of the bill. Who is having the bill? That person only needs to pay, and then finally he need to recover it from that other person who is responsible for that. Basically, it will be a other person who is a drawee. Okay, so this bank account is having the bill, so it is a holder of that bill. So the noting charges are initially paid by. That's what the key point. Initially paid by the bank. Option A is your answer. Then question number 39.
Rebate is calculated for the period between date of.
Rebate is calculated for the period between the date of. That's what the key point is. So what is a rebate? Rebate is a yearly payment. For making a yearly payment and giving some discount, that is known as rebate. Okay, so let's say I need to due date. Due date is 1/10/2024. Payment date is 1/6/2024. Actually, I need to pay 1/10/2024. What I am actually paying at 1/6/2024? It is from a payment date to due date, or I can say it is a payment date to the maturity date. My answer is option A. Understood? Shall we move on to next one? Yes.
A bill of exchange cannot be.
Cannot be, that's a keyword here. It can be endorsed. It cannot be crossed. It can be accepted. Okay, here the answer is crossed. Crossed is your answer. Next.
Bills payable honored during the year will be debited to.
Bills payable honored during the. What is a journal entry? I will pass when I was accepting that bill. If I was accepting that bill, I will pass entry A to bills payable. At the time of honoring the bill, I will pass the reversal entry bills payable to A. That's how the bill is got honored or the bill is got honored. So what I will do? Bills payable to A. So the answer will be bills payable account. Okay, or honoring the bill. Let's say instead of A account, you will put the bank account. Bills payable to bank. Bills payable account, I will debit it. Next.
A draws a bill on B. A endorses the bill to C. The pay of the bill will be.
Interesting question. Payer, pay. First, let us understand this. Then we will go. Payer is a person who is going to pay. Payer is the person who is having that bill, and pay is the person who is going to receive that amount. So A is a person who draws a bill on B. For A, it is bills receivable. For B, it is bills payable. A is endorsed to C. For C, it is going to be bills payable, bills receivable. Now it is going to be a bills receivable for us. Now the payee of the bill, who is having that bill right now, okay, who is going to receive that amount, okay, who is that person? B is going to pay, obviously, okay, because the B is only the need to pay that bill, okay. C is having that receiver end, so payee means a receiver. So here the answer is option C. C is known as a receiver. Next.
Notary public may charge its fee from the
We are actually seeing which is charging free from basically from the holder of the bills of exchange. Next.
PQ draws a bill on XY for rupees 1,30,000 on 1/1/2022. XY accept the same on 4/1/2022 for period of 3 months after date. What will be the maturity date of the bill?
This is an interesting question, important question, which may be tested in your examination. There will be a slight keyword is there that is known as after date. First, let us understand what is the keywords is there. Days of grace is an important thing. Okay. Whenever you come across with the term after date, you will assume that date of drawings, DOD means date of drawings. DOA means date of acceptance. If it is after date, you will consider DOD. If it is after date, you will consider DOD. If it is after sight, what is meant by after sight? Sight means seeing. After seeing that bill only, we are going to calculate the date. Means if they given the word after sight, we are going to take date of acceptance here. Now they are asking maturity date of the bill. I will give you that value. First, after date is there. So after date is there. First, write that date 2022. Now, period is 3 months up. Put 3 months over there. Now it became 1/4/2022. Days grace means we obviously know 3 days is a grace of days as per Negotiable Instrument Act 1881. Okay, 3 days is going to be there. Next, now 3 days of grace you need to add. So it will be 4/4/2022. So the answer is option A. Suppose if you take this date of acceptance at the after date, you will commit a wrong answer by putting option C. Don't do that. Okay, whenever it is an after date, it is DOD. Date D. That is date drawings date you should take. After date, drawings date you should take. After sight, okay, sight, you need to take an acceptance. AS or SA, whatever you can want to remember, you can remember. And I will give you one more trick then. Days of grace is not allowed. When the bill is not allowed, when the bill is payable on demand. On demanding only we are paying the bill. So there is no requirement of getting the days of grace. And then at sight, at seeing the bill, once I watched the bill, once I came to my eyes, I immediately pay that. Then it is obviously not there. Days of grace is not required. Only in case of after date or after sight, the dates of drawings or date of acceptance will be there. So make sure whenever there will be a tricky questions on that part, you are going to crack it. Next, 45. Read that 45. X sold goods to Y of rupees 5 lakh. Y paid cash of rupees 4,30,000. X will grant 2% discount on balance. Y requires to X to draw a bill for the balance amount of the bill. X sold goods of 5 lakh. Y has paid 1,000. So the remaining value is 70,000. How 70,000? 5 lakh minus 4,30,000 it is 70,000. He is going to grant 2% discount. Calculate 2% discount. On 70,000, calculate 2% discount. on 70,000, calculate. This is already paid. 4,30,000 is already paid. So they are only going to get 70,000. On that 70,000, is my voice is audible? Everybody, is my voice is audible? Hari Krishnan, is my voice is audible?
Yes, sir.
Yes, fine. This 70,000, on that you will charge 2%. That is outstanding bill payable. 70,000 into 2% will give you 1,400. If you subtract from 70,000 minus 1,400, you will end up in 68,600. So your answer is option C is your answer. Okay, next. Hari Krishnan, read that 46th question.
Or the consignor sent out the goods costing rupees 2 lakh to K for sale on commission basis. Consignor expenses rupees 5,000. Consignee expenses in relation to sales rupees 2,000. 4/5 of goods were sold at 20% above cost. Commission charged by K is rupees 5,000. The profit on consignment will be.
So the point is, or is a consignor sending the goods costing 2 lakh. Okay, the costing of the goods is 2 lakh. Their sale on commission basis, consignor expenses 5,000. Fine. Consignee's expense in relation to sales was 2,000. Fine. 4/5 of the goods were sold at 4/5 of the goods. What is the goods consigned? 2 lakh. On 2 lakh, calculate 4/5 into 4/5. What is the value? Take a calculator. 2 lakh into 4/5. What is the value? 1,60,000. On that 1,60,000, they are charging how much? 20% above the cost. Add plus 20% in your calculator. Plus 20%. What is the value? 1,92,000. This is what the sale value is. So 1,92,000 is a sale value. So sale value is 1,92,000. So this is what goods consign. This is what consignor's expense. This is what consignee's expense. This is what the sales. That is what consignee's account you will put it. Okay. Commission charged by K is 5,000. So this is what commission is. Okay. Now we will tally which side the profit on consignment. 4/5 of the goods. Now you don't forget to add that consignment closing stock. How you can find the consignment closing stock, sir? 4/5 of the goods is sold. So remaining 1/5 should be your closing stock or consignment stock. Calculate 1/5 on 2 lakhs. It is 40,000. 40,000 is your closing stock. On that, now calculate 1,92,000 plus 40,000 will give you 2,32,000. On that same 2,32,000 you will put it. On the 2,32,000, subtract the above debit side items. The debit side items is 2,12,000. On the 2,12,000, right? It is 2,12,000, right? 2,12,000. If you subtract 2,32,000, you will get 20,000 as your value. Wait, what's the value I have done? Just a minute. Here, while computing the closing stock, you need to add two things. One is, actually you need to add three things. One is actual goods sent on consignment. Plus, you need to do consignor's expense. Then you need to add consignee's non-recurring expense. Here, the sales commission is a recurring expense. Whenever the sales has happened, it is going to be there. So here in this question, it is not in our scope. What is the amount left? 40,000 is an amount left. Okay, on 2 lakh, we will find out 1/5. In the same way, on 5,000, the still amount is there. No, some part of the stock is not even sale, right? So that is 1/5. On 5,000, if you find 1/5, it is 1,000. So if you add, it is totally 41,000. So if I add 41,000 here, it will become 2,33,000. On 2,33,000, if you subtract 2,12,000, it will become 21,000 as your profit on consignment. So the answer is option A. Then read the next one. Read the next one.
Mr. A consigned
Mr.
goods costing rupees 2,50,000 to Mr. B at an invoice price of rupees 3 lakh. The goods were to be sold at invoice price or above. Mr. B sold some of the goods at invoice price of rupees 2 lakh and some at 10% above cost. That is rupees 1,10,000. For this, he gets 5% commission. The amount of commission is.
Very simple question, but you may find it difficult if you don't know the concepts. I will tell you. Okay. X consigned the goods costing 2,50,000 at the invoice price is 30,000, 3 lakh. That is a load of extra 50,000 is still there. The goods are to be sold at invoice price or above. Fine. Mr. sold goods, some goods at an invoice price of 2 lakh. He is selling some part of the goods at 2 lakh and some at 10% of above cost. That is 1,10,000. So he is selling another some part of the value is more than the 10% of the above cost what he has sent. So totally it is going to be 3,10,000. Right? For that, he get 5% commission into 5%. That's it. Very simple. 3,10,000 into 5%. What is the value? 15,500. That's it. 15,500 is my answer. 2 mark, you can easily secure. They may test you like this kind of question only in your examination. Then, Hari Krishnan, read that 48.
1,000 kgs of mangoes were consigned to wholesaler. The cost being rupees 3 per kg plus rupees 400 freight. Loss of 15% of mangoes is unavoidable. 750 kgs
Unavoidable.
sold by the consignee.
Consignee.
The remaining inventory of 100 kgs will be valued at.
That's what the question. No. So first, I have 1,000 mangoes. On the 1,000 mangoes, it is 3 rupee per kg. So total it is going to be 3,000 plus freight. Freight is going to be 4,000. So totally it is going to be 3,400. Correct? 3,400. Normal loss. It is a loss of 15,000 is unavoidable is a keyword. So it is a normal loss. Normal loss, it is not going to reduce the price. Okay. So what we will do on the 1,000 kgs, this is a 1,000 kgs. On the 1,000 kgs, what is the total value? It is 3,400. On that 15% is unavoidable. What is 15%? It is merely 150. 150 is unavoidable. That is a normal loss. Amount is not going to be reduced. So here it is only 850. 850, you will get 3,400. 750 kgs were sold by the consignee. We don't know how much, what is the value of sold. We will find out the cost value. So it is 750 they are asking. And then the final question, the requirement of the question is only 100. So there will be a two-way process part. One, calculate this value. Okay, multiply by 3,400 into 750 divided by 850. Do that and find the value. 3,400 into 750 divided by 3,400 multiplied by 750 divided by 850. You will get 3,000. Now you will put 3,000 over there. And then if you subtract, you will find out the 400 as your value. So you will go with option C. There is an alternative way. In the 3,400, I am not having that intention to find this value. So I am directly going have an intention to find the value, and I am not having to take a base as 750. I'm going to take a base as 100. So instead of 750, you will put 100 over there, and 3,400 into 100 divided by 850, you will get exactly 400. This is a two-way approach. Which method is suitable for you, you can take. Read the next question.
Which of the following commission is allowed by the consignor to the consignee to encourage the consignee for putting up hard work in the introducing new product in the market?
In simple, which commission is allowed to the consignor to consignee for putting up the hard work? I want more profit. So you will sell the goods over and above the price. So over and above the price, I will give them an independent way. You can sell the price, whatever the price you will give, I will pay some more commission on that extra profit also. What you are going to provide me as an extra surplus. So it is merely nothing but overriding commission. What is a del credere commission? Del credere commission is nothing but to bear a bad debts for them, to have a credit sales, to encourage that credit sales. For that risk, the consignee will able to bear that. For that amount, we are going to give a commission that is known as del credere commission. Hardware commission is not there basically. Ordinary commission is basically on that sales value will give you ordinary commission. Okay, so option is option B. Next, 50.
Which class of account is consignment account?
Which class of account is a consignment account? Basically, in consignment account, what we will do? Debit, we will record the expenses. Credit, we will record the income, sales, whatever will that. What is the difference? Expenses, income, which account? Nominal account. That's it. Next, 51.
The balance in consignment account shows
balance in consignment account. Finally, we derive one no. Which one? The first question we have done no. Which is what is in consignment account? What is the balance we have derived? We have derived that profit. So it is merely nothing but profit or loss on consignment. Here the answer is option C. Everybody understood?
which of the following statement is not true?
Which of the following statement is not true? So they are asking not true. If they are asking not true, it is a false. Which of the following is false? If del credere commission is allowed, bad debt will not be recorded in the books of accounts. So if the del credere commission is allowed, because bad debts is not going to bear by me, it is bear by others, so we will not record that. If del credere commission is allowed, bad debts will be debited in the consignment account. No, it will not debited in my consignment account if the del credere commission is allowed. If it is not allowed only, bad debt will be debited. Okay, if it is allowed, it is not debited. So it is false. So it is true. We will see other two options. Del credere commission is allowed by the consignor to consignee. True. Del credere commission is generally given to promote the credit sales. True. My option is option B. So answer is option B. Next.
Which of these expenses are not included in valuations of abnormal loss?
Valuation of abnormal loss, that's what I told. Whenever you come across with valuation of closing stock, valuation of abnormal loss, everything will be on the same approach. Goods sent on consignment plus consignor's expense, consignor's all expense, what are the recurring or non-recurring, everything, plus consignee's expense, that too in specifically non-recurring expense, because recurring expense is not related to the purchase activity or not related to the sale activity. We will record everything. Okay, whenever there's a normal loss, we will subtract that value. So we will record these values. So we will check with that. Good on rent. Good on rent is a recurring expense. Freight and insurance paid by the consignor. Consignor expense. We will take everything. Transit insurance incurred by the consignee. Transit insurance is a one-time insurance at the time of transportation. It is a consignee's one-time non-recurring expense. We will consider that. Loading and unloading expenses incurred by the consignor. Consignor's all expense we will take. They are asking not included in the valuation of abnormal loss. In abnormal loss, good on rent is actually paid by the consignee. So consignee's recurring expense is not going to be there. So my answer is good on rent. Understood? Then go for 54.
A pro forma invoice is sent by
Pro forma invoice is a claim which is sent by the consignor to the consignee. Basic logic thing. If you want this consignment entire approach conceptual clarity, we have already uploaded the 4 to 5 years of conceptual consignment classes. You can go and watch and secure your full-fledged mark. If you want more clarity on bills of exchange, that classes is also be there. You go and watch and get your mark succeed if it is in case of 5 mark or 7 mark or 8 mark question. In case of basics of fundamentals of accounting, we have 10 basic 11th and 12th classes we have uploaded. That is more than equivalent to CMA Inter. You can still watch the classes and you can secure that conceptual clarity over there. Then come to question number 55.
The consignment account is made which of the following basis?
Consignment account is made basically on the accrual basis. That's what the simple reality concept is. It's not based on cash basis. Whenever I send the goods, I will record whether it is sold or not. That's what the accrual system is. So the answer is accrual basis. Next.
If del credit commission is allowed for bad debts, consignee will debit the bad debts amount to
commission earned amount. Whatever the commission is earned, that amount only you will credit it. We will debit it in that consignee's account. Okay, consignee will debit it. Next.
Out of the following, at which point treatment of sales and consignment is same?
Treatment of sale and consignment is same at the time of inventory outflow itself. Whenever it go out of his hand, they treat it as a sales and they will treat it as a consignment. That's what the accrual system is being. So it is inventories outflow. Next, after the joint venture, we will take a short break. Rate at 58.
Anuj bought goods of the value of rupees 10,000 and consigned them to Bittu to be sold by them on a joint venture. Profits being divided equally. Anuj paid rupees 1,000 for freight and insurance. Anuj draws a bill on Bittu for rupees 10,000. Anuj got it discounted at rupees 9,500. Bittu sold the goods for rupees 15,000. Commission payable to Bittu rupees 500. The amount to be remitted by Bittu to Anuj will be.
This is an important and interesting question which many of them will fail, and it's somewhere time consuming also. But I will try to put my maximized effort to be able to understand for you. He bought the goods for value for 10,000, right? This is my expense. Then Bittu sold them to a joint venture. Profits being divided equally. This is an equally. So it is 1:1 ratio. Anuj paid 1,000 as a freight. So it is also an expense, 1,000 as a freight and insurance. Anuj draws a bill for 10,000. Anuj draws a bill to Bittu. So the entry will be bills receivable to Bittu for how much? 10,000. 10,000. This is a separate disclosure. Anuj got discounted at 9,500. So Anuj got the bill and he's got discounted. We are preparing everything in Anuj books. So Anuj got discounted. Anuj got in the bank. So the 500 is discount is still there. Okay, the 500 discount is there. The entry will be bank account, discount account to bills receivable. Bills receivable entire 10,000 is there. In bank, you will get 9,500. In discount, you will get 500. That is related to that Anuj. And Bittu sold the goods for 15,000. Fine. On that 15,000, commission payable is 500. So what they will do, this discount, because the bill, basically they are both in a joint venture, that 500 discount should be treated as it is putting in that respective joint venture memorandum account. So that will be a 500. So if you put the values 15,000 and if you put that 15,000, now this by putting this 500 is a more crucial thing. Then what is the remaining value? 15,000 from the 12,000 is over. So the remaining value will be 3,000. Don't go blindly and choose the option B by seeing the word 3,000. No, it's not like that. Just wait. What is an actual good sold by Bittu? Bittu we will prepare. Bittu, how much is sold? 15,000 is sold. On that, what is a value? This 3,000, no, this is a profit. This profit should be shared by equally. That is 1,500 and 1,500 should be shared by them in an equal ratio. Okay, should be shared by them in an equal ratio. On that, he is already accepted a bill. Bittu is already accepted how many worth of bill? 10,000 worth of bill is already accepted. The remaining value is 5,000. On that 5,000, he already got the commission payable to Bittu was 500. Okay, already got the commission of 500. So now we will subtract the commission of already taken that 500. So what you left? 4,500. On that 4,500, what is my profit? My amount of profit is there. That is 1,500 I will take. Okay, I generated 1,500, 3,000 profit. It is an equally share. You will take 1,500. I will take 1,500. Actually, I need to pay 15,000 because I sell. For that, I already accepted the bill of 10,000. I need to pay only 5,000. On that 5,000, that is payable. You need to pay me a commission as I have done a sales to you. So that 500 is over. So it is only still you need to pay me only 4,500. Okay, on that 1,500 is already a profit which is in my name. I'm going to deduct that value. So only 3,000 is that value. That's how the 3,000 is arrived. It's not blindly that 3,000 which you're preparing, but that joint venture account, whatever the account you prepare. Okay, so option B is your answer. This is an interesting question which may be tested in your examination. Next.
Annie and Bunny enter into a joint venture, sharing profits and losses into the ratio 1:1. Annie purchased goods costing rupees 20,000. Bunny sold the goods for rupees 25,000. Annie is entitled to get 1% commission on purchase, and Binny is entitled to get 5% commission on sales. The profit on venture will be
very simple. Goods costing 20,000 and purchasing. Bunny sold for 25,000. Fine. Commission on purchase, commission on sales, both everything is going to be an expense for me. 1% commission on purchase. What is the commission purchase value? 20,000. Calculate 20,000 into 1%. What is the value? You will get 200. What is a purchase? Binny is entitled to 5% on sales. What is the sales value? 25,000. On 25,000, calculate 5%. It is 1,250. Okay, now calculate 25,000. Here 25,000. Okay, subtract from 25,000, subtract 20,000, minus 200, 25,000, minus 20,000, minus 200, minus 1,250. You will get 3,550. That's it. Simply we will do. Move on to the next one.
goods sold by the other co-venture is debited to
Goods sold by the other co-venture is debited to other co-venturers' personal account. This is a basic concept which you need to remember. Next.
if any stock is taken by a co-venture, it will be treated as
treated as an income to that joint venture. Any stock which is treated by the co-venture. Next.
if Kaveri's acceptance, which was endorsed by us in favor of Salim in dishonor, then the amount will be debited in our books too.
Actually, it should be in a bills receivable. Okay, our team has mistakenly put it in joint venture. We are humans, we are also going to commit a mistake. That's fine. We'll do this. If Kaveri's acceptance, which was endorsed by us in favor of Salim, Kaveri's acceptance. For Kaveri, acceptance, it is bills payable for Kaveri. Endorsed by us. For me, it is bills receivable. In favor of Salim. For Salim, it is going to be bills receivable. Because for Salim, I am going to be a liable. For me, if I take us and Salim, for us it is bills payable. For Salim, it is bills receivable. To pay my bill, I am sending the bills receivable what I receive from Kaveri. So the amount that will be debited in our books, I will debit what? Kaveri's account to Salim account. So I will debit only Kaveri. So the answer is option B. Next. 63.
Shyam and Ramya are entered in the business of buy and sale of food grain for a period of one year and sharing the profit sharing in the ratio of 2:4. This agreement is
the keyword is 1 year. 1 year only they are having. It is not a partnership. It is not a consignment. It is only a joint venture. Okay, for temporary purpose. For that particular job, we are agreeing, and we are after that 1 year we will go. Next, 64.
Memorandum joint venture account is prepared.
The memorandum joint venture account is to prepare find out the profit and loss. That's what we have prepared in the first or second question. Memorandum joint venture. Next.
The share of profit of a co-venture maintaining only his own transaction is
only her own personal transactions will be according to the debit to the others co-venturer personal account. Next.
Which of these terms or concepts are not relevant to a joint venture?
The concept is not relevant. Okay, not relevant concepts. Co-venture is a concept. Then temporary partnership, yes. Principal and agent relationship, no, there is no principal and agent relationship. Sharing and profit, everything is there. So my answer is option C. Next.
A and B enter into a joint venture, sharing profit and losses in the ratio of 3:2. A purchased goods costing rupees 2 lakh. B sold 95% of goods for rupees 2,50,000. A is entitled to get 1% commission on purchase, and B is entitled to get 5% commission on sales. A drew a bill on B for an amount equivalent to 80% of original cost of goods. A got it discounted at rupees 1,50,000. What is the A share of profit?
Fine. We'll do it easily. Purchases 2 lakh. Sales 2,50,000. Here I need to find out the closing stock. How I can find out the closing stock? 95% of the goods. First calculate 2 lakh into 95%. What is the value? 2 lakh into 95%. What is the value? 1,90,000 is the value. On that 1,90,000 only, I am selling it for 2,50,000. Then what is the remaining amount? 5%. On 2 lakh, what is the 5%? That is 10,000. So that 10,000 is going to be my closing item. Okay, that 10,000 is going to be my closing item. Then I have paid a commissioner. As you've seen, the commission on purchases is being paid at 1% and commission on sales is paid at 5%. So commission on purchases, commission on sales, it is 1%, it is 5%. What is 2 lakh into 1%? 2 lakh into 1%, if I am not wrong, it is only 2,000. Okay, into 5%. Sales, 2,50,000 into 5%. It is 12,500. If you add all this, now we are going for tallying. That's it. 2,60,000. 2,60,000. Okay, that's what we are preparing. Memorandum joint venture only. We are preparing for that account. Now we will do 2 lakh plus 12,500 plus 2,000. You will get 2,14,500. Subtract from 2,60,000. You will get 40. Wait, we have done anything? Wait, a bill. Here we have missed this point. A drew a bill on B for an amount equivalent to 80% of the original cost of the goods. What is the original cost of the goods? 1,90,000. On that 1,90,000, okay, on that 1,90,000, he is 80%. What is that 80%? 1,52,000 is that 80%. Or they are saying original cost of the goods only they are saying, right? So we will directly go with 2 lakh. On the 2 lakh, we are getting 80% of the bill. So 2 lakh into 80%. It is somewhere around 1,60,000. On that 1,60,000, A got discounted at 1,50,000. So it's got 1,50,000. What is the discounted value? 10,000 is the discounted value. Put that discounted value over there. This is a key point which you need to add. So if you add, it is going to be 2,10,000 plus 12,500 plus 2,000. It is going to be 2,24,500. On that, if you subtract 2,60,000, you will get 35,500. On that, this is the entire profit, out of which we need to only calculate A share. Okay, A and B are the 2 persons, right? A share is, they have given, it is 3:2. So it is nothing but 3/5. How do I calculate 3/5? It is 35,500 into 3/5. 35,500 into 3/5 will give you 21,300. This 21,300 is my answer, option B. These are some time consuming question. Once you have a practice, it will be easier for you. Next. 68. How many questions? Last question under the joint venture. After that, we will take some short break. Next.
A and B enter into a joint venture to sell a consignment of biscuit, sharing profits and losses equally. A provided from his inventory rupees 10,000. He paid expenses amounting to rupees 1,000. We incurred further expenses on carriage rupees 1,000. He received cash for sales rupees 15,000. He also took over goods to the value of rupees 2,000. The profit on joint venture will be.
Just now we have seen in one of the example that any asset which any two goods which is taken over by the other person is known as an income, right? So what we'll do, A provided the biscuits from his inventory, that is an expense which is paying, so that is 10,000. He paid an expenses amounting to another 1,000 as some petty expenses, what carriage expenses he has done. We incurred a further expenses of 1,000. He is also selling another, he is in his packet, he is going out of 1,000. He received a cash of 15,000. So on that is going to sale of 15,000. He took over the goods value. That's A took over the goods value of rupees 2,000. So that's what the total value is. So if you identify totally 17,000 is an income over here, and here it is totally 12,000. The difference between them is only 5,000. That 5,000 is a total profit of the joint venture. So that's it. With this 68 questions, along with 2 modules, if I say from ICMA study material, from here it is only 2 chapters, the 2 big chapters that entirely having a basic fundamentals we have completed. After a 15 minutes break, we are going to start with our preparation for financial statements. Here the time right now is 12:35. We will take a 15 minutes break. We will come back at 12:50. Okay, those who are watching this videos through YouTube also, you will also take a break for 10 to 15 minutes and then come back and then resume the video. Okay, we will start after 15 minutes. Yeah, now after a break, we are going to start with chapter number 3, preparation of financial statements. So preparation of financial statements of commercial organization, we are going to see. Now, Priyanka, you can read the question.
Trade discount allowed is deducted from the gross sale. Sale is recorded in the books of account at.
Sale of recorded is because it is a sales value. From the sales value, I'm regarding to discount, trade discount. On that, I'm going to give you net sales invoice value. That's our final value. So my answer is net sales invoice. Next.
Sold goods worth less price of rupees 8,000 at 10% trade discount and 2% cash discount. 25% received at the time of transaction only. The amount posted to the discount account will be.
They are asking. This is a 8,000 is a value. On that, I'm getting 10% trade discount. If I get 10% trade discount, it is 800. If I subtract, I'm going to get 7,200. On that, 2% cash discount, 25% received at the time of transaction only. Transaction only, you are going to receive 25% of the value. So 7,200 into 25%, it is going to be 1,800 you are going to receive. On that, you are going to provide 2% cash discount. Calculate 2% on 8,800. So you will get 36,000. So this 36,000 you will debit it on the debit side because it is a discount allowed. We will debit it. Next.
The cost of the closing stock was 5 lakhs. Realizable value is 120%. Realizable expenses 5%. At what amount stock will be shown in the income statement of Malaya Co., which is not going concern?
This is a keyword part. Don't forget, not a going concern. Okay, not a going concern. Go with realizable value. Okay, go with the realizable value. If it is a going concern, go with cost approach. Okay, now we'll go for realizable value. What they say, 5 lakh into realizable value, 120%. So 5 lakh into 120%. From that, I will calculate expenses amounts to 5%. I will subtract 5%. What the value? 5 lakh into 120% will give you 6 lakh. Okay, on that 6 lakh, subtract 5%. If I subtract 5%, it will give you 5 lakh 70. My answer is option C. Be careful while deducting this 5%. Then, question number 72.
Cost of the goods available for sale is rupees 2 lakh. Total sales is rupees 1,60,000. Opening stock of the goods is rupees 40,000. Gross profit margin is 25%. The closing stock of the goods was
opening stock was 40,000. Understand the key point. Cost of goods available for sale, that is a finished goods which is available for sale, is 2 lakh. This finished goods available for sale includes opening stock plus purchases. Okay, so here the purchases value will be 1,60,000. How I identify from 2 lakh, I will subtract 40,000. So I will get 1,60,000. What is the gross profit margin? They say 25%, on which they are saying it is on, simply I give 25%, it is on sale. So what is the GP? 25%. Calculate 1,60,000 into 25%. 25% on sales. What is 25% on sales is nothing but 40. If I add, it is going to be 2,40,000. Same 2,40,000 over here. If I subtract, it is going to be from 1,60,000, it is going to be 1,80,000. So 80,000 is your closing stock. Option C is your answer. Then 73.
rates and taxes paid is rupees 300 during 2022 and 2023. At March 31st, 2023, the rates and taxes were prepaid to the following 31st January. The yearly charge being rupees 300. Calculate the prepaid rates and taxes to be shown in the closing balance sheet.
What is the rent and 22 to 23? They are paying 300. At March 31st, rate and taxes were prepaid to the following 31st January, that yearly charge being 300. On 31st March only, okay, to the following 31st March, I am paying 31st Jan, for that year end, I am paying 300. Okay, for that year end, I am paying 300. So it means the entire 300 rupees will be for whole year, 12 months. But out of which I have paid on 31st January for that next 31st March 2023. So it will be how many months if you calculate, it will come to 10 months. Okay, it will come to how many months? 10 months time frame. So if I do 300 divided by 12 into 10, if I do, you will get 250. So my answer is option A. Then 74, that's what the closing value, prepaid value, which I want to show in my balance sheet of the asset side. Okay, if I want the examiner, if I want to test you more, I will give you rupees 250 asset side, rupees asset side on the balance sheet, rupees 250 liability sides of the balance sheet. Like this, I will give you and try to confuse you whether you are going to put it on asset side, whether you are going to put it on the liability side. So if it is a rent prepaid, any taxes, any payment which is prepaid, we need to receive a benefit. So it is an asset. Now read at 74.
Balance sheet is prepared with the balances of which of the following?
Which of the following? It is simply all the balances in the ledger. We are not preparing balance of real accounts, balance of personal accounts. It is merely a balance of personal and real accounts. In that, we'll only take debtors, creditors, assets, liabilities. That's what we will take. No, so it is only a balance of personal and real account. Next 75.
Choose the correct statement.
Simply given financial statements need not to correct statements. They are asking true or false. Financial statements need not to take a consideration of any statutory. No, they need to comply with Companies Act. They need to comply with respective banking regulation act. They need to comply with electricity act. Every financial statements need to be properly on statutory requirement. It is false. Only credit transaction are recorded in books of accounts. Not necessarily. You will record every transaction, cash transaction, credit transaction will record it in the books of accounts. Financial statements is prepared by two different accountants will always show identical results. No, it may show identical results. It may not show identical results. Not necessary to show same results. Financial accounts of an enterprise are treated as an evidence in the court of law. Yes, it will be treated as an evidence in the court of law. So this is true. So answer is option D. Then 76.
Choose the most appropriate fund from the given following alternatives. At the end of the accounting year, advances to suppliers are
advances to the suppliers. Advances to the suppliers which I need to pay. Okay. Or let's say at the end of the accounting year, advances to the suppliers, which I made. Okay, let's say this is a thing which I make the advances to my suppliers. For that, I need to get a future benefit. Okay, after 6 months or after 2 months or after 30 days or after 10 days, I need to get a benefit. At the end of 31st March, I am making a payment to my suppliers. My suppliers is nothing but my creditors. On the creditors, I am making a yearly payment. For that yearly payment, I need to give a benefit. I need to derive a benefit. Anything which I need to be received, either in form of monetary or non-monetary, it will be treated as my asset. Anything which I need to owe, which I need to pay, that will be treated as my liability. Here the answer is option C, shown in the balance sheet of the asset side. Okay, in the balance sheet, you will show advance to suppliers. We'll give the entry value. Next.
Which of the following will not appear in profit and loss account?
Whenever you read the question, it's not appear. It is simply which will appear, you will see. Indirect expense, indirect income. Other than this, it will not there. So capital, definitely not there. From here itself, I will choose option A. Because they are asking not appear. Bad debts, provision, rent pay, it's all ordinary in the P&L. Next, question number 78.
Due to retrospective effect on revision of salary of the employees, the arrears of salary relating to past years payable in current year is.
This is an interesting point. Due to retrospect means in the future, whatever I go back to my past and I'm going from my past, I'm going to rectify everything to the current value or the current payable. So that is not a pre-period item. It is not an extraordinary item. It is an ordinary item requiring a separate disclosure. You need to require as per separately. That's what our accounting system will be. So the answer is option C. Next.
Opening debtors, collection from debtors, and discount allowed.
Whenever you are asking like this, you will prepare that account. Opening debtors, what is the value? Opening debtors and collection from debtors and discount allowed is given. So opening debtors is 3,15,000. Then collection from debtors, you will record it on the opposite side. By cash, you will record 18,30,000. Then discount allowed, by discount allowed, you will record 35,000. If the closing debtors, that's the key point here. This is an interesting question which may try to confuse you. Okay. If the closing debtors were 20% of the credit sale, here I'm going to record my closing. It's going to be 20% of the credit sales of the period, and the closing debtors and the credit sales they are first asking closing debtors and then only they are asking credit sales. Suppose let's say there is 20%, I'll put 0.2. Here, I will put 0.2x. Then if I put credit sales or the sales account, here it is going to be 0.8x because what 20% is already going for closing creditors, closing debtors. Now 0.8 is only lies with the creditors, credit sales. So what I will do, or I will put this as x. Okay, to put it a credit sale, I will keep one item as x and I will put 0.2. Then if I add, what is the value over here? 18,30,000 plus 35,000. You will get 18,85,000 plus 0.2x. Here it will become same 18,65,000 plus 0.2x. Already they are having from 18,65,000 plus 0.2x. They are already having 3,15,000 plus x. Okay, now if you take 18,65,000 on the same side, on subtract 3,15,000 to the opposite side, this x remains same. 0.2x will take on to the right hand side. If you subtract, you will get the value of 15,50,000. On that 15,50,000, x minus 0.2x will become 0.8x. Then 15,50,000 divided by 0.8. 15,50,000 divided by 0.8 equal to x. So here x what we have considered is credit sales. So if I put a credit sales of 0.x, it will become 19,37,500. So I will go to my option. The credit sales is given as second. 19,37,000 is given as my option C. So I directly go with option C. But here the point is I need to identify whether it is correct or not. From that, what we have considered 20% we have considered. From the given value, calculate 20%. into 20%, you will get 3,87,500. That's it. That's your closing debtors. So your answer is option C. Next question number 80.
Outstanding salaries is shown as
outstanding salary. Basically, outstanding salary is a liability. So liabilities, we need to show it in the balance sheet. And if there is any adjustment in the P&L statement on that salaries due to the matching concept, we will add that expenses related to that. So we will add that outstanding expenses related to the current year. So by liability in the balance sheet, by adjusting in the P&L, so it will be both B and C. That will be option D. Okay, 81. Read that question
average
number 81.
inventory. If average inventory is rupees 1,25,000 and closing inventory is rupees 10,000 less than opening inventory, then the value of closing inventory will be.
Say, let's say, I will give you one. Suppose my closing inventory, they are saying 10,000 less than my opening inventory. Suppose if my opening inventory was 20,000, what should be my closing inventory? What should be my closing inventory bar? Unmute and answer. They are given a statement, closing inventory is 10,000 less than the opening inventory. So it should be only what? 10,000. Suppose if it is 50,000, my closing inventory should be what? 40,000. First, if you understand this logic, then it will be easy. What is the average inventory formula? Average inventory is equal to opening inventory plus closing inventory by 2. So the average inventory is given 1,24,000. If I cross multiply by 2, it is going to be 2,50,000 of opening inventory plus closing inventory. So if it is opening inventory and closing inventory, so we are going to pay 2,50,000 equal to opening inventory and closing inventory. Now the point is occur. Now, will they given any closing inventory is less than the opening inventory? Now what I will do, I will go for an option checking method. The value of closing inventory, they are given in the question. So I will go with an option checking. So I will put closing inventory of 1,35,000 over there. Okay, closing inventory what? 1,35,000. It should be closing inventory is 10,000 less than the opening inventory. Obviously, 10,000 should be greater than my closing inventory. It should be 1,45,000. So if I add, I need to get 2,50,000. Will I get 2,50,000 over here? Definitely not. I am getting how much? 2,80,000 I am getting. So option A is not my answer. Then 1,15,000 is there. So suppose if I put 1,15,000 as my closing inventory, my opening inventory should be 1,25,000. If I add, okay, if I add this 2,40,000 only I will get. I may not get it 2,50,000. So B is also not my answer. Then I will go for C option. Suppose if I put C closing inventory is 1,30,000, my opening inventory should be 1,40,000 because 10,000 is greater than that opening inventory will be. So it is 2,70,000. That's also not my answer. My answer is option D. This is a one way. You can easily find out the value if you know the concepts well. Okay. Next, question number 82. Read that question.
Following information is given. Opening stock is rupees 2,13,000 and purchases 16,55,000.
Okay.
Sales is 21,32,000. Carriage inwards is 32,500 and carriage outwards is 38,600. Returns inwards is 38,000. If the rate of gross profit is 25% on cost, then the value of the closing stock will be.
$20,94,000 is there. And here the important point is you should not consider this carriage inward. Carriage outward should not be considered. It is related to the sale item. It will comes in the P&L. It will not comes in a gross profit. It will not comes in a trading amount. The rate of gross profit is 25% on the cost. If it is 25% on cost, Okay, if it is 25% on cost, I'll say it is 1/4 on cost. If it is on sale, it should be 25/125 on sale. It will be 1/5 on sale. How I can find out, sir? For example, cost plus profit is equal to sale. We know cost is 100. Profit, let's say they say 25% on. So my sale value will be 125. My sale value is 25/125. My cost will be 25/100. That's what I have written over here. So it is 1/5 on sales. So calculate 1/5 on 20,94,000. 20,94,000 into 1/5. If I put, I will get 4,18,800 as my gross profit margin. If I add all my debit side, 2,13,000 plus 16,55,000 plus 32,500, I will get 23,19,300. 23,19,300. On that, I will subtract 20,000, 20,94,000. You will get 2,25,300 as your final solution. So this will be option C is your answer. Next, read the next question.
A company wishes to earn a 20% profit margin on selling price. Which of the following profit markup on cost? Which will achieve the required profit margin?
Whatever I have said previously, the same thing is there. They said a company wishes to earn 20% profit margin on selling price. This is my cost. This is This is my cost. This is my profit. This is equivalent to sales. They say, suppose my sales is assumed as 100. For easing purpose, I am assuming 100. They say 20% on margin on selling price. This is my selling price. On 100, if they say calculate 20%, it is 20 rupees. Then my cost should be 80 rupees. So if I calculate 20/100 is equal to 1/5 or equal to 20%. In the same way, 20/80 is equal to 1/4 equal to 25%. My answer is option B. Everybody understood? Next, question number 84.
Sales for the year ended 31st March 2022 amounted to rupees 10 lakhs rupees. Sales included goods sold to Mr. A for rupees 50,000 at a profit of 20% on cost. Such goods are still lying in the godown at the buyer's risk. Therefore, such goods to be treated as a part of.
What is into? Very simple. I already made a sales of rupees 10 lakh. That sales included the value of rupees 50,000 for Mr. A. Whatever the profit margin is not relevant. Okay. Such goods are still lying in the godown at the buyer's risk. Let's say they will take it later. They say, keep the goods with you. I will take it later because it is at the buyer's risk only. It is in the seller's godown. Therefore, such goods, even once the sale is done, we will treat them as a sales. So it will be a sales. There may be a confusing trick whether you will go for a closing inventory or whether you will go for a sales. Only the sales is done, it is going to be treated as only. It is not going to be treated as closing inventory. It is like the seller's godown. Next, 85.
Income tax.
Now we are going to start with preparations of financial statements of not-for-profit organization. Okay, I think so. Another 10 to 15 questions is there. Okay, we will quickly do it. Read.
Income tax paid by a sole trader is shown.
Income tax paid by a sole trader. In simple, income tax which is paid, which is treated as a drawings, so it should be deducted from the capital. So my answer is option C. Capital in the balance sheet. Next, question number 86.
At the end of the accounting year, subscription received in advance and outstanding rent of club will be shown in the balance sheet.
Will be shown in the balance sheet. Subscription received in advance. I have received it. I need to liable for it. So it is a liability. Outstanding rent of the club, which I need to make a pay, another liability is there. So both the things should be recorded on the liability side. Both of the liabilities. Answer will be answer option B. Next.
In case of a club, the excess of expenditure over income is called as.
Always expenditure over income is deficit. Okay. always expenditure is less than income is your surplus. Remember this. In your examination also, while writing, don't write two surplus, write two excess of income over expenditure. Okay. And write in brackets, write surplus. It will be a good thing for you. So here the answer is deficient. Then 88.
Income statement of a charitable institution is known as.
Very simple. If it is a NPO, what is the income statement? Income statement is nothing but income and expenditure account. Option C. This is not receipts and payments account. Remember, it is income and expenditure is only an income statement. Receipts and payments account you only see it's like a merely a cash account, merely a cash book, which is prepared. What is entirely I received? It's an income statement means what is entirely I generated as an income for that current year. 89.
A not-for-profit organization received rupees 10,000 as the entrance fees of a new member. If 20% of the fee has to be capitalized, what is the amount of fee needs to be shown in the income and expenditure account?
20,000, it should be capitalized. It should be shown on the balance sheet. On the liability side, we will show. What is the difference between 10,000 and 2,000? It is 8,000. On that 8,000, we will show it in the income and expenditure account. So the answer is option B. Next. Question number 90.
General donations and legacies are credited to.
Generally, donation and legacies are credited to. Here the two-way approach is there. Some of the question in basically general donation will go with what income and expenditure account. In some of the questions, legacies is there. In some questions, we will treat them as revenue. In some questions, we will treat them as a capital. So here I will directly go with income and expenditure, or else if you want to go with none of this, still you can go with the none of this option. Okay. Basically, suppose you have only general donation, directly go with income and expenditure. If you have legacies as well, go in the best way approach, go with that none of the above. Okay. Next, 91.
Telephone charge paid is rupees 1,500 during 2022 and 2023. A quarter charge for telephone is outstanding. The amount accrued being rupees 300. The charge for each quarter is same for both 2021 to 22 and 2022 to 23. Calculate telephone charges to be shown in the opening balance sheet as at 1/4/2022.
Right. Telephone expenses outstanding account we are going to prepare. On that first, we need to write by brought down. This is what I need to find. I will circle it. Then what I actually paid, 1,500 actually paid. Entry will be like what? Outstanding expenses. I need to pay it. The liability is gone. Now I need to pay it through cash. So to cash, I will pay 1,500. So I will record it on the debit side. They said the amount of quarterly charge was 800. On the 1,800, what is current year charged? Current year charge means every quarter. Each quarter will having a 4 quarters each year. So in P&L account, I should record 300 into 4. That is 1,200. If I do that, 1,800 minus 1,200 will become 600. That 600 will be my option. That was I want to show it in my opening balance sheet. Next one.
Surplus or profits of non-profit organizations are.
Surplus or profits of a non-for-profit organization is simply they are given options. It is not distributed among the partners. Yes, true. May or may not be distributed among. No, it is debited to general fund. It will be debited to general fund if it is a surplus or profit, or it may be instead of general fund, it should be debited to the capital fund. Okay, distributed among the partners? No, the answer is not distributed among the partners. Then question number 93, interesting question.
A charitable institution has 250 members with an annual subscription of rupees 5,000 each. The subscription received during 2018-19 were rupees 11,25,000, which include rupees 65,000 and rupees 25,000 for the years of 2017 to 18 and 2019 to 20 respectively. Amount of
Fine.
outstanding subscription for the 2018 to 19 will be.
What is the subscription outstanding for the current year? First, we will calculate what is the amount yet to be received. That is 250 into 5,000. What I need to receive? 12,50,000 I need to receive. Out of which I received something in 2018-19. That amount to 18-19 I am received something amount to 11,25,000. Out of which 11,25,000 I have paid 65,000 already somewhere included. I will remove that. Already 25,000 included for the next year. That I will remove 25,000. If I subtract 11,25,000, subtract 65,000, subtract 25,000, you will get 10,35,000. On the 10,35,000, I have actually received 12,50,000 I yet to receive. For the current year, I only received 10,35,000. If I subtract, what is the value? 2,15,000. My answer is option C. Okay. Then question number 94. Subscription of rupees 6,25,000 had been shown in income and expenditure account prepared for the current year. It is shown in income and expenditure account only. The additional information is there. What is a subscription received? There is a slight difference between subscription earned and subscription received. Subscription received maybe for the current year, maybe for the previous year, maybe for the next year. But the subscription earned is only for that current year. They have given, it is completely going to be a reverse calculation. I will explain this concept by taking some time so that it will become easier for you. Whenever you go from receipts to income and expenditure, you will do two things. You will add, two things you will subtract. One is closing outstanding, you will add. Okay, that is closing outstanding which I need to receive, subscription I need to receive. You will less opening outstanding. Okay, then in the same way, you will add opening pre-received and you will subtract closing pre-received. You will arrive at income and expenditure. Suppose if you are going for an income and expenditure, two receipts and payments, it is a completely reversal process. Less opening out, less closing outstanding, add opening outstanding, less opening pre-received, add closing pre-received. Okay, to arrive at the subscription received point. This is subscription earned point. Okay, so what I will do, here it's my opening, here it is my closing. Here subscription outstanding, here it is pre-received. That is I received in advance. So I will done everything. So it will be opening outstanding. So it will be closing outstanding. It will be opening pre-received. It will be closing pre-received. If you understand this logic, it will easily work. Okay, why it is added? Because it is not related. If it is adding here, why I am adding? It is related to the current year. So I am adding. So opening outstanding is related to the previous year, which is received in the current year, which is not is included in the current year, which is not earned in the current year. So I am subtracting. What is opening pre-received? Which I received in the previous year, related to the current year, I will add it. Closing pre-received means which I received in the current year for the next year. For the subsequent year, I am receiving it by today. So it is not related to the current year. I am subtracting. That's it. The reversal vice versa is work. So here I will put the same values. Income and expenditure, what value they are given? 6,25,000 they have given. I will put that value. Then I will subtract closing outstanding. Closing outstanding is 72,000. Then I will put opening outstanding. Opening outstanding is 55,000. Okay, 55,000 I will add. Then closing opening pre-received. Opening pre-received is 31,000 I will subtract. Then closing pre-received is 37,000 I will add. Okay. Now give me the value. Those who are watching this video also, you can also participate. 6,25,000 minus 72,000 plus 55,000 minus 31,000 plus 37,000. You will get 6,14,000 as the total income received. My option is option C. Understood? Next, we'll go with an incomplete records. After that incomplete records, we will take a break. Then, take question number 95.
If opening capital is rupees 70,000 and closing capital is rupees 90,000, what is the amount of profit or loss?
What is amount of profit? Very simple. Closing minus opening. Closing capital minus opening capital. What is closing? 90 minus 70 is nothing but 20,000. 20,000 is my profit. That's it. Any drawings will be there. Any additional capital will be there. We will take that respective one. Okay. Then 96.
The closing capital of Mr. B as on 31st/3/2022 was rupees 4 lakhs. On 1/4/2021, his capital was 3,50,000. His net profit for the year ended 31st/3/2022 was rupees 1 lakh. He introduced rupees 30,000 as additional capital in February 2022. Find out the amount drawn by Mr. B for his domestic expenses.
Fine. What will do? Closing capital they have given 4 lakh. On 1/4 capital, opening capital they have given 3,50,000. Net profit they have given that is 1 lakh. Okay, everything is in there. He introduced 30,000 as an additional capital. Additional capital is invested in the business. My capital balance got increased. So it is in my closing capital. Now I'm going to backward. So I need to deduct my additional capital. So I will subtract the additional. I need to do additional capital. I need to subtract. Okay. What is the value? 30,000. If I subtract 30,000, it is going to be 3,70,000. Okay. In that, they are asking drawings. Drawings, previously I have withdrawn. Okay. My amount capital got reduced. For that matter, I'm going to add back. So that I will add that drawings. What is the drawings? The difference between 3,50,000 and what I committed a mistake. Just a minute. Yeah. Here, you will need to less the additional capital if you're going from a upward to downward. Now we are going from a downward to upward. That is, profit is given, opening capital is given, and then we are going for that process. So what we need to do on that matter, this additional capital should be add. Okay. If you add that additional capital, you will get 4,30,000 as the value. From that 4,30,000, if you identify the differences, 4,30,000 minus 3,50,000, you will get 80. So if you, what actually it will be no, if you add this and if you have less this, and if you arrive at the opening capital, and then if you arrive at a profit, it will be there. So it will be 80,000 is your answer, option B. So for this, I want you to request you to watch the exam-oriented classes. Okay, to have a good conceptual clarity, because in your examination, there's some minimum come for 7 mark or 10 mark or 14 mark problem will be there. So I want you to save this marks to get a minimum guarantee of 40 marks, maximum guarantee of exemption from that. So what you need to do, go for an exam-oriented class, watch all the videos. Let's say we have uploaded 10 to 15 videos that due for respective chapters like consignment, bills of exchange, and final accounts of sole proprietor, then incomplete records, NPO we have uploaded, then insurance claim we have uploaded. So this 6 chapters will give you a good weightage of 40 to 50 marks. Along with this MCQ 30 marks, total 60 to 70 marks is within your hand. If I want to go for more basics of accounting, then go and watch for 10 hours to 20 hours of basics of accounting class, which is there for 11th and 12th. The same thing is still there in the CMA Foundation as well CMA Inter. Read that so that you will have an assured guarantee of 70 plus marks as a free class. Okay, with the help, you can easily score 60 plus if you follow that. Still, you have time to clear your exams. Read your next question.
Closing capital is calculated as?
Basically, closing capital, what we have calculated, that is the entirely reversal process. Opening capital, on that we will add that profit, from that we will add additional capital, and we will subtract the drawings to arrive at the closing capital. My answer is option B. Next.
Under single entry system, only personal accounts are kept, and in some cases,
cash book is maintained. Very simple. Only personal accounts are maintained, and some cases cash book is maintained. Only personal accounts and the personal accounts of the creditors and the cash book is maintained fully. Other accounts are not maintained properly. That's what the meaning is. Next, 99.
Single entry system can be followed by.
Can be followed by small firms. Can be followed by not joint stock companies, not cooperative societies. It will be none of them. So it will be formed by small size firms and small size partnership firms they can do, and small sole proprietorship they can follow. Then now we have come to a century series. Double 100 series is divided into two. That is century. We are going to hit 100 questions. We have spent almost 2 to 2.5 hours. 10:30, 10:40 we have started. 11:40, 12:40, 1:40, 3 hours. We have done 100 MCQs. It means we spent 1.8 minutes for each and MCQ to be discussed in total on an average, so that we arrived 100 MCQs. So read that.
In case of net worth method, profit is determined by.
In case of net worth method, profit is determined by whatever you've done, no opening capital plus addition, everything is known as nothing but what? Closing capital plus comparing with the opening capital, we derive whether we are in a profit situation or whether in a loss situation. So the comparing a capital in the beginning with the capital at the end of the period. So it is option B. This net worth method or statement of affairs. That's what the different meaning, profit and loss method, everything will be there. So that will be option B is your answer. So congratulate yourself. You have stick to this 3 hours and you have done this 100 MCQs. You have learned the concept which previously you don't know, which you currently know, which you already know some MCQs, and you have given an attention to have a series of learning to learn this 100 MCQs. Okay, congratulate yourself once again. Now, after a break, we will be starting with our partnership accounting. We'll go for a lunch break and we will resume at 3 p.m. Okay, stay tuned. Those who are watching this video through YouTube also, go for a lunch break and then resume this video. This video is going to be a complete one video. Okay, so go and come back at 3 o'clock.
Recording in progress.
Now we will be resuming after a wonderful having a lunch. So we are starting with question number 101. I want Priyanka to read the question further.
Yes, sir. X and Y
Yeah.
are the partners with a capital of rupees 50,000 and rupees 30,000 respectively. Interest payable on capital is 10% per annum. If the profits earned by the firm is rupees 4,800, what will be the interest on capital for X and Y?
Yeah, very good. Here, when chapter 4 is there, partnership accounting, we are roughly going to do 36 questions. This entire 36 questions covers 80% of the basic concepts related to the partnership accounting. With good conceptual clarity, you will get. Don't skip this 36 questions. This 36 questions, you can expect all our problem solving questions. 1 or 2 will be a theory based question. This 36 question, you can expect minimum 1 or 2 questions, so that it will be, you can secure 4 marks. That 4 marks will be easier for you to make score exemption, easier to make you pass. So make sure you are focusing on this 36 questions. If I also understand, if I am not able to understand that keywords, I may also get the wrong answers. So make sure you are getting and you are attentive throughout this 36 questions. So they are given X and Y, they are having a capitals. So they are given a percentage. So we will simply find out the percentage. 50,000 into 10% will give you 5,000. Okay, then 30,000 into 10% will give you 3,000. In total, it is going to be 8,000. Okay, if the profits earned by the firm is only 4,800, it means it is an inadequacy of the profits. Inadequacy of the profits. What will be the interest on capital? Whenever there will be inadequacy of the profit, the point of capital ratio will comes to picture. you need to divide whatever the profit is there, you need to divide it on the basis of capital ratio only. There should be no interest on capital to be provided on the basis of capital ratio, not on this 8,000. So 4,800 should be divided on the basis of capital ratio. Capital ratio is 50,000 and 30,000. It is nothing but 5:3. So if you divide 4,800 into 4,800 into 5 by 8. What is 4,800 into 5 by 8? 4,800 into 5 by 8. You will get 3,000. That is for X. For Y, same 4,800 into 3 by 8. It is going to be 1,800. So answer is option B. Then read question number 102.
A and B are the partners sharing profits in the ratio 5:3. They admit C with 1/5 share in profits, which he acquires equally from both 1/10 from A and 1/10 from B. New profit sharing ratio between A and B will be.
Very good. Interesting question. Reverse calculation question. A, B is there. They are having the profit, they are having everything is there. They are new profit sharing. So what you will do, A, you will take B. What is A's old profit? Old is 5 by 8. B is what? 3 by 8. On that, that's a new person who is C. C is getting 1/5. Fine. A and B is sacrificing and give it to the C, and he is having 1/5. How this 1/5 has arrived? No, 1 by 10 from A, 1 by 10 from B. So total it is 2 by 10. It is equivalent to 1 by 5. That's how the C 1 by 5 will be arrived. So here the point is we need to make a calculation. This is acquires equally. This is a sacrificing ratio. So what you will do, you will take 1 by 10 into 1 by 10. What you will get? 5 by 40, 80. Here you will get 3 by 80. Okay. The way you can approach the problem. 5:8 is one way. And to make the base same, you will do 80 over here and it should be multiplied by 14. So it should be multiplied by 16. So in the same way, in the numerator also, you will multiply by 16. This is a one way. But alternatively, what you can do it in a single step. Let's say A, you are having 5 by 8. B, you are having 3 by 8. Already you know how much they are sacrificing. Okay, you already know how much they are sacrificing. Sacrificing, they are going to, from their old profit sharing ratio, they are going to remove, they are going to sacrifice. That they are sacrificing 1 by 10. What is the value? If you cross multiply, 10 into 5 is 50. 1 into 8 is 8. Divided by 8 into 10 is 80. Okay, if you take LCM for 8 and 10, if you take directly 2 table, even if you want to go, then 4 table, 1, 5. Then if you go for 5 table, obviously 2, 5, 5 fours are 20, 20 fours are 80. So obviously 80 is there. So it will be 42 by 80. Okay, then if you same LCM is going to be 80, it is 30 minus 8. It is going to be 22, 22 by 80, 42 by 80. Then if I see C is what? 1 by 5. If I want to make it as base is 80, what I can multiply over here. If I want to multiply, it is nearly 16. So I will put 16 over here. So 16 by 80. So it will be 42 is to 22 is to 16. If you add 42 plus 22 plus 16, you will get 80. So but they are asking only A and B. What is A and B? A and B is 42 is to 22. If I subtract divided by 2 table, it is 21 is to 11. My answer is option A. Next, question number 103.
A, B, and C are the partners sharing profits in the ratio of 4:3:2. D is admitted for
Fine.
2/9 share of profits and brings 30,000 as his capital.
Fine.
And rupees 10,000 for his share of goodwill.
Okay.
The new profit sharing ratio between A is to B is to C is to D will be 3:2:2:2. The goodwill amount brought by D will be shared by.
Very simple. We'll open A, B, C, D. What is the old ratio of A? 4 by 4 plus 3 plus 2. It is 4 by 9, 3 by 9, 2 by 9. D is not there. When there is new. So when it is new, it is going to be 3 by 6. So it is going to be 3 by 2 by 10, 2 by 10, 2 by 10. The goodwill amount brought by D will be shared by, that's what the question is. So we will find gaining ratio, or we are going to find sacrificing ratio. If we do 4 by 9 minus 3 by 10, 4 by 9 minus 3 by 10 will give you 90. If you cross multiply, it's 40 minus 27. 40 minus 27 is 13. So it will be 13 by 90. 3 by 9. 3 by 9 minus 2 by 10 will give you 90. 13 minus 18 will give you 12 by 90. Is 12 by 90. Then C, it is 2 by 9 minus 2 by 10. If you multiply, it is 90. It is 20 minus 18. It is 2 by 90. Okay, this remains same, 2 by 10. If I want to make the bases same, so I will write down as 18 by 90. If I want to write it over here, it will be 2 by 90. Okay, then what is it here? The point is, who is going to sacrifice the ratio? The goodwill amount brought by D will be shared by, here the amount which is brought by D. Just a minute. Sorry for the mistake which I have committed. Here it is only 3:2:2:4. So it is nearly nothing but only 9 is a total. I have wrongly calculated this. Sorry for that. Because it is only total is 9. Okay. So it will be 3 plus 2 plus 2 plus. So it is totally 9. The new profit sharing ratio will be 3 by 9, 2 by 9, 2 by 9, and 2 by 9. If I find out gross profit or sacrificing ratio, 4 by 9 minus 3, 4 by 9 minus 3 by 9 will give you 1 by 9 as a sacrificing ratio. 3 by 9 minus 2 by 9 will give you 1 by 9 sacrificing ratio. C is not going to sacrifice anything. D is going to gain this from A and B put together, so that you will have a 2 by 9. Kindly understand this question carefully, because I myself is committed a mistake by wrongly calculating it. So make sure. Okay. So here only who is sacrificing? A and B are sacrificing. So the answer is option B. Then read question number 104.
A, B, C, D
Read
are
question
in
104.
partnership. A, B, C, D are in partnership sharing profits and losses equally. They mutually agree to change the profit sharing ratio to 3:3:2:2. In the process, D losses.
What is a B's loss? That's what they are asking. In new, we will take. In new is 3 plus 3, 6, 6 plus 2. I don't want to commit the mistake again. 3 plus 3 is 6, 6 plus 2 is 8, 8 plus 2 is 10. So it will be 3 by 10. Here it will be 3 by 10. Here it will be 2 by 10. Here it will be 2 by 10. So what I will do, they are asking only D. My concern is only about D. 4 by 1 by 4 minus 2 by 10. If I calculate 10 minus 8 divided by 40, it is nothing but 2 by 40. It is nothing but 1 by 20. So 1 by 20 is my answer. Everybody understood? Shall we move on to next question?
Yes, sir. Yes, sir.
Yes. Read the next question.
A and B are the partners sharing profits in the ratio 3:2, with capitals of 50,000 rupees and 30,000 rupees respectively. Interest on capital is agreed at 6% per annum. B is to be allowed an annual salary of rupees 2,500. The profits
Fine.
of the year prior to calculation of interest on capital, but after charging B's salary amounted to rupees 12,500. Manager is to
Fine.
be allowed a commission of 5% of profits remaining after deducting salary and interest on capital, but before charging such commission, Profit transfer to
Fantastic.
partner's capital account will be.
Very interesting question. Only 2 mark. Within a matter of 1 minute, we can easily do. Merely is nothing but a P&L appropriation account. We will find the P&L appropriation, rough P&L appropriation we will put. What is the net profit they have given? 12,500 they have given, but it is after charging base salary. But we need a net profit before charging anything. So we will add back the base salary of 2,500. So it will entirely become 15,000 is my net profit, out of which I will debit the base salary 2,500, and they are having an interest on capital at 6% to be provided on 50,000 and 30,000. So commission interest on capital. So interest on capital A, B. What is the interest on capital A, B? 50,000. In total, everything 6% remains same. What I do for calculation purpose, because we are not going to give you any reason. Okay, so 50 plus 30 is going to be 80,000. On that 80,000, you will directly charge 6%. 80,000 into 6%, how much? 4,800. So we will write 4,800. Okay, next. After manager B is allowed to commission of 5% of the profit remaining after deducting the salary and interest on capital. Now we will game for a conclusion. This is 15,000. Now the balance is going to be 15,000. Out of which 15,000 will calculate this value. Okay, that is 2,500 plus 4,800. That is comes to 7,300. From 15,000, I will subtract the value. If I subtract the value, it will become 7,700. This is the amount after charging salary, after charging interest on capital. On that, I need to provide 5%. If I calculate 5% into 5%, it will become 85. If I subtract the value, 7,700 minus 385 will give you 7,315. So the remaining value 385, I will record it as commission. So I'm left with 7,315. This 7,315 will be divided between partner A and B or X and Y in the ratio of 3:2. So it will be 3/5. Here it will be 2/5. They are asking profits transferred to capital account. What is the value? Take a calculator. 7,315 into 3/5. 4,389 is for A. For B, divided by 3 into 2. B will be 2,926. So my answer will be option A. Everybody understood? Next, question number 106.
Total capital employed by a partnership firm is rupees 1 lakh and its average profit.
Read the question. And the average profit on the normal return is 20% in a similar firms working under the similar condition. The firms earn a super profit. In simple, it is a goodwill, your favorite chapter. What capital employed? Capital employed is 1 lakh. They are given a normal rate of return. NRR they are given. That is 20%. So from that, you can simply find out normal. If I need super profit is nothing but average profit minus normal profit. Okay. So normal rate of return will be calculated by capital employed of 1 lakh into 20,000. Totally, it is equivalent to 20,000. 1 lakh into 20% is 20,000. Average profit is 25,000. So 25,000 minus 20,000 is going to give you 5,000 as an average profit. Simple super profit. So my answer is option B. Read the next question.
A and D are equal partners. They wanted to admit C as 1/6 partner who brought rupees 60,000 as goodwill. The new profit sharing ratio is 3:2:1. Profit sacrificing
Fine.
ratio will be.
Okay, there are A, D, C are partners, equal partners, 1/3, 1/3, 1/3. They want to admit, actually A and D are partners. So it will be 1/2, 1/2, old. Okay, they want C to be there. So new ratio will be, he is admitted for 1/6 of the partnership. Okay, the ratio will be 3/6 to 2 by 6. So it will be there. The profit of sacrificing. The sacrificing is actually, if you see, I want to change the base to 6. Here also everything is 6 no. So I want to change the base to 6. If I want to change the base to 6, which number I should add it over here? 3 I should add. In the same way, in the numerator, I will add 3. So it will be 3 by 6. Old is also 3 by 6. New is also 3 by 6. So A is not sacrificing anything. 0% is not sacrificing. In a B, in the same way, I will put 6 over here. Okay, to remain the base same, I will multiply by 3. The numerator also I multiply by 3. Previously, it was 3 by 6. Now it was 2 by 6. He has sacrificed 3 by 6 minus 2 by 6. He has sacrificed 1 by 6. So A is sacrificing 0. D is sacrificing 1 by 6. So answer is option A. Answer is option A. Okay, then come to question number 108.
Ramesh and Suresh are partners sharing profits in the ratio of 2:1. Ramesh capital is rupees 1,02,000 rupees and Suresh capital is 73,000. They admitted Mahesh and agreed to give him 1/5 in share. He brings rupees 40,000 as his share of goodwill. He agreed to contribute capital in profit sharing ratio. How much capital will be brought by incoming partner?
How much capital will be brought by the incoming partner? That's a best question. First, Ramesh is a person is having how much capital? 102 capital. Suresh is a person having how much capital? 73 capital. What is the total capital of the firm before the admission? That's what my question. That is 1,75,000. Right? That is, they say Magesh agreed. Magesh is going to be agreed for 1/5 of the share. It means he is going to come for 1/5 of the share. So the remaining 4/5 of the share denotes this value. The remaining 4/5 of the share denotes this value. Okay, so I'm going to calculate the 4/5 value. So after admitting that person, so it will be 1,75,000 divided by 4 by 5. So it will be like 1,75,000 into 5 by 4. So 1,75,000 into 5 divided by 4, it will become 2,18,750. It was the total capital of the firm. Okay, total capital of the firm after admitting the Magesh. For that, he is agreed to contribute on his profit sharing ratio. His profit sharing ratio was 1/5. What is the total capital base? 2,18,750. On that, you will calculate the value into divide 1 by 5. You will get 43,750. So that's your answer, option A. Move on to question number 109. Read that. It will be look like a bigger question. But if I go and see the question inside, it will be matter of 1 minute. We can easily solve. Read that.
A partnership firm earned net profits during the last 3 years as follows. 2007, 15,000, and 2008, 20,000, on 2009, 25,000. The capital investment in the firm throughout the above mentioned period has been rupees 1 lakh. Having regard to the risk involved, 15% is considered to be a fair return on capital. Goodwill on the basis of 2 years, purchase of average super profit earned during the above mentioned 3 years will be.
Goodwill, they are asking 2 years of average super profit. Okay, first we will find the average. What is a super profit? Super profit is nothing but an average profit minus normal profit. If I need a goodwill under super profit, it is nothing but super profit into number of years of purchase. Okay, for that matter, we'll first find out the average profit. Take a calculator, add this and put divided by 3 and give me the average profit value. Take a calculator and give me the value. 15,000 plus 20,000 plus 25,000. It will give you 60,000. On that 60,000 divided by 3 is going to be give you 20,000. Okay, 20,000 is an average profit. So 20,000 is an average profit. Normal profit is nothing but multiplication of capital employed and normal rate of return. 1 lakh into 15%. 1 lakh into 15%. If I am not wrong, it is going to give me 15,000. Subtract 15,000, you will get 5,000 as a super profit. My answer is still not over. They are asking the goodwill. This 15,000, 5,000, they are asking 2 years of purchase. So 5,000 into 2 years, it is going to be 10,000 for that 2 years. So my option is option B. Next read question number 11. Sir, 110, sorry.
A and B are equal partners with capital of rupees 10,000 and 8,000 respectively. They admit C as a partner with 1/4 share in the profits of the firm. C brings 8,000 as his share of capital. The value of the goodwill will be.
Here, the interesting question, important question is identification of hidden goodwill. Okay, goodwill is not at all given. We need to find out the hidden goodwill. I will give you a trick. Whatever the capital, step 1, take a capital which has been brought by the new partner. What is the capital brought by the new partner? 8,000. That's what they have given. What is a share? Yes, going to come 1/4. Reverse it. What is a 1/4? 1/4, if 1/4, what is the reversal of 1/4? It is 4. Multiply by 4. 8,000 into 4 will become how much? 32,000. On that 32,000, first A is having how much capital? 10,000. B is having how much capital? 8,000. C has brings how much capital? 8,000. If you add all this, find out the value. If I am not wrong, it is 26,000. Wait. 8,000 plus 8,000, 16,000. 16 plus 10,000 is 26,000. If you subtract, you will get 6,000 as a hidden goodwill. So my answer is 6,000. Simply we can do step 1, reversal of the profit sharing ratio of the incoming partner along with the incoming capital base. On that, you will get the total capital base of the firm after admitting C. From that, calculate the individual capital amounts. Sum of this, subtract from the total capital base. You will find out the difference. That difference is nothing but hidden goodwill. Next. This next 10 questions should be read by Hari Krishnan.
A, B, and C are partners sharing profits, sharing the profit and losses in the ratio of 9:4:3. The firm took separate life policy of rupees 25,000 for A, rupees 20,000 for B, and C 51,000. What is the share of C in the policy amount?
So the separate life policy, joint life policy, there are two. Both are taken for the partnership firm in the names of the partners. Both is related to the partnership firm. Partnership firm only pay the insurance money. Everything has been paid. But what is the benefit of separate life insurance policy? It is simply merely in the name of the separate persons. It will be there. When at the time of policy sharing, the firm took a separate, at the time of policy sharing, we will club all the separate life policy and we will divide them in the basis of an profit sharing ratio. In simple, we'll calculate 25,000, 20,000, 51,000. Add all this. What is the value? 25 plus 20 plus 51. You will get 96. On that 96, we will multiply. They are asking only C. 9 plus 4 is 13. 13 plus 3 is 16. Correct? That 16. So what is C? C is 3 by 16. Calculate 3 by 16 into 3 by 16 will give you 18,000. So this 18,000 will be your option. A is your answer. Understood? Simple, easy. 112.
P and Q are partners sharing profits in the ratio of 2:1. R is admitted to the partnership with effect from 1st April on the term that he will bring rupees 20,000 as his capital for 1/4 share and pays rupees 9,000 for goodwill, half of which is to be withdrawn by P and Q. How much cash will P and Q withdraw from the firm on account of goodwill?
Did you believe the question starting from here and ends in here, it is completely irrelevant for the required answer. But what is a goodwill is paying? 9,000 is a goodwill is paying. They say half of the goodwill is withdrawn. What is a half of the goodwill? Half of the goodwill is 4,500 rupees is withdrawn. Remaining 4,500 will be in the books of accounts. It will be withdrawn by whom? P and Q. How much share cash will P and Q withdraw from this account? They need to withdraw on the basis of sacrificing ratio. So they need to withdraw on the basis of sacrificing ratio. In the given question, there is no sacrificing ratio. So what we will do, we will directly go with the same ratio of 2:1. So it will be 2/3. It will be 1/3. If you calculate 4,500 into 1/3 into 2/3. So 4,500 into 2/3 will give you 3,000. Will give you 1,500. Don't go with directly option B blindly. 9,000 is a goodwill. So 6,000, 3,000. Don't go with that. So option A is your answer. Next. 113. Quickly read that question.
A and B are partners with capital of rupees 10,000 and 20,000 respectively and sharing profits equally. They admitted C as their third partner with 1/4 profits of firm on the payment of 12,000. The amount of hidden goodwill.
Okay, fine. Now we are going to follow a 3-step approach. First thing, find out the capital which has been brought by the new partner, that is 12,000. What is the share? He has come for 1/4 of share. Reverse the 1/4. It will become 4. 12,000 into 4 will become 48,000. That's whatever second step. That's what the first step we have done. What is the second step? Add all the capital base. A is having 10,000, B is having 20,000, C is having 12,000. Add all this. 20 plus 10 is 30. 30 plus 12 is 42. So total value is 42. What is the remaining value? Remaining value is 6,000. That 6,000 is nothing but an hidden goodwill. That's it. Easy. Next. 114.
A and B who share profits and losses in the ratio of 3:2 as following balances. Capital of A rupees 50,000.
Read the question. Read that question. Somebody read the question.
Hello.
Read that question.
They admit C as a partner who contributes to the firm as rupees 25,000 for 1/6 share in the partnership. If C is to purchase 1/6 share in the partnership firm, the existing partners A and B in the ratio of 3:2 for rupees 5,000 as goodwill. Find the closing capital of C.
Closing capital of C. That's what the given question they are asking. Okay. So we need to do that question. We will read the question again. Okay. A and B who share the profit and losses in the ratio of 3:2. Capital of 50,000, B is 30,000, reserve fund is 15,000. They admit C as a new partner who contributes 25,000 for the firm for 1/6 of the share. If C purchases 1/6 share in the partnership firm from an existing partners A and B in the ratio of 3:2 for 5,000 is a goodwill, find the closing capital. Very simple. In that 25,000 is contributed by the C as a opening capital. On that goodwill has been 5,000 is there. That goodwill 5,000 we will subtract. I will tell you why we are subtracting it. Because this partnership firm from my existing partners A and B in the ratio of 3:2 for 5,000 goodwill. This will be adjusted to capital account. Okay, it will be adjusted through capital account. So we will subtract that value. That value is not going to be there in my books. So it is only going to be a closing capital of 20,000. Option C is my answer. Then we'll go for question number 115. Read that question.
X and Y are partners sharing profits in the ratio of 5:3. They admitted Z for 1/5 share of profits for which he paid rupees 1,20,000 against capital and rupees 60,000 against goodwill. Find the capital balances for each partner's taking Z's capital as base capital.
Okay. So very simple. In same thing also, total capital base problem. First step approach. We will take a capital brought by the new partner into 1/5. Reverse that. 1/5 is nothing but 5. So 1,20,000 into 5. How much? 6 lakh. This 6 lakh is to be divided into X, Y, Z. We already know Z is going to come up with 1,20,000. Correct? If you remove 1,20,000 over there from 6 lakh, if you remove 1,20,000, you will get only 4,80,000. On that 4,80,000, there is no new profit. We will divide them in the ratio of 5:3. So 4 lakh into 5 by 8. What is 4 lakh into 5 by 8? Will give you 3 lakh. This will be 5 by 8. Next, this is going to be 3 by 8. Okay, wow. So if it is 3 by 8, it is going to be how much? 1,80,000. So we will find out 3 lakh, 1,80,000, 1,20,000. 3 lakh, 1,80,000, 1,20,000. Option C. But I will give you one more thing. They may give you, suppose, find out the capital balance. Instead of each partner, they may give you for partner X, comma Z, comma Y. They may interchange that partner. Then they may value get interchanged. So the answers may get changed. So be careful by reading that. Then question number 116.
A and B are partners with a capital rupees 15,000 and 40,000 respectively. They share profit and losses equally. D is admitted to
Fine.
bringing rupees 50,000 as capital only, and nothing was brought against goodwill. Goodwill valued as rupees 35,000, which was adjusted through the capital accounts of the partner. What will be value of goodwill in the books of after the admission of C?
Very simple part. Goodwill value 35,000. I already value. That is already adjusted through capital accounts of our partners. Now, what is the value is there? Already 35,000 is there. That 35,000 is to be distributed among the partners entirely. Now, what is the value? 0 is the value. So the answer is nil. Next. Read the question.
A, B, and C are partners in a business sharing profit and losses in the ratio of 3:2:1. On 30th June 2009, C retired from business when his capital account, after all necessary adjustments, showed a balance of rupees 10,950. It was agreed that he should be paid rupees 4,950 in cash on retirement, and the balance in 3 equal yearly installment, interest at 6% per annum. Amount of last installment with interest will be
Very simple. 10,90,000. 4,950 I paid. Remaining 6,000 I need to pay at the end of the first year. On that first year, 2,000 I paid plus interest I have done. Then in the second year, 4,000 is pending. On that second year, I will need to pay 4,000. On that I am paying 2,000 outstanding to cancel and plus interest. Finally, in the third year is arrived. In the third year, the final balance of 2,000 needs to be paid along with interest. The interest percentage they have given 6%. How you will calculate 2,000 into plus 6%? Take a calculator and do 2,000 plus 6%. You'll get 2,120. So the answer is option A. Very simple, easily, logically, we have understood. They are asking only the last installment. Okay. Next. 118.
A, B, and C were partners in a firm sharing profits and losses in the ratio of 2:1 respectively, with the capital balances of rupees 50,000 for A and B. For C, rupees 25,000. B declared to retire from the firm, and balance in reserve on the date was 15,000. If goodwill of the firm was valued at rupees 30,000 and profit on revaluation was 4,050, then what amount will be transferred to the loan account of B?
Is simple. They are simply asking B's capital account. They are given a huge question. They are asking us to prepare B's capital account. Very simple. We will easily do it. What is a B's opening capital? Take that value. A and B 50,000. So capital will be 50,000. B declared from retaining the firm and balance in reserve date was what? Reserve was 15. This entirely 15 is not only for B. It is also for A. It is also for C. So we will only take the B share. B share is what? 2 by 5. In everything, you need to calculate 2 by 5. Take a calculator. 15,000 into 2 by 5. 6,000. Then, if the goodwill of the firm is valued at 30,000, then 30,000 into 2 by 5. Goodwill. What is 30,000 into 2 by 5? 12,000. Okay, next. Profit on revaluation. Everything profit also distributed. So 7,050 into 2 by 5. 7,050 into 2 by 5 will be 2,820. Add all this. 50,000 plus 6,000 plus 12,000 plus 2,820 will give you 70,820. So my answer is option A. Shall I tell you? I am not going to solve this in my exam. In a single step in a calculator, I'm going to get this answer. Believe me or not, just listen. Just take a calculator, cancel all the values by pressing that green button, whatever this button you will cancel. Simply press 50,000 and press M plus button. Okay, and you will take this 15,000. Okay, you will take this 15,000 and multiply by 2 by 5. 50,000 M plus 15,000 into 2 by 5 M plus 30,000 into 2 by 5 M plus 7,050 into 2 by 5 M plus MRC. In a single step, I will get the answer. What I need to do? 15,000 into 2 by 5 M plus. Next, 30,000 into 2 by 5 M plus 7050 into 2 by 5 M plus. Finally, MRC, if you press, you will get all the answer. Final answer will be derived 70820. Single step easily you do within a matter of 10 seconds to 20 seconds. If you identify this question, whether they are asking transfer to loan account, simply prepare capital account, whatever the balancing figure that I am not going to pay in cash, that I am going to transfer to a separate account called loan account. Thereafter, I will pay it later. So that only they are not asking a B's loan account. They are asking B's capital account on the balancing figure value paying through loan account. That's it. Then read 119.
A, B, and C are partners sharing profits in the ratio 2:1. On retirement of B, goodwill was valued as 30,000. Contribution of A and C to compensate B will be.
Okay, the goodwill value will be 30,000. Out of it, it is a firm value. What is a B value? We will identify 2:1. So it will be 2 by 5. So find out 2 by 5. 30,000 into 2 by 5 will give you 12,000 as my value. Okay, this 12,000 needs to be compensated by A and C in the respective profit sharing ratio. That is 2:1. So if it is 2:1, it is going to be 8,000 and 4,000. Okay, so my answer is 8,000 and 4,000. What they are given? A. Kindly change it to option B. A is your answer. Sorry, B is your answer. 8,000 and 4,000 respectively. Then read question number 120.
A, B, and C are partners sharing profit in the ratio of 3:2:1. B retires and goodwill of the firm is fixed at rupees 1,80,000. No goodwill appears in the books of the firm. A and C decide to share profits in the ratio of 3:1. B's share of goodwill will be adjusted in the capital account of A and C.
Very simple. Very simple. B and it is has been adjusted within the form of gaining ratio. That's it. B retires and the goodwill of the firm is fixed at 1,80,000. Who is retiring? B is retiring. That should be taken care by A and C at the gaining ratio. At the time of admission, it should be a sacrificing ratio. At the time of retirement, it should be a gaining ratio. If you identify the word retirement, you will directly go for a gaining ratio. Then Meera, read the question number 121.
Okay, sir.
Yeah.
A, B, and C are the partners sharing profit and losses in the ratio of 5:3:2. Took a joint life policy of rupees 30,000. On the death of B, what amount will be payable to each partner?
Each partner, D is going to die. On the death of B, B is died completely. Okay. What is the amount of policy? 30,000. Out of which, what is B's share? Or what is total share? We will find out. Payable to each partner only they are asking, right? So it will be 5 by 10. First find out 5 by 10. That itself you will find out the answer. 30,000 into 5 by 10. That's it, 15,000. Only I have my option A. So I will directly go. I will not even check B. I will not even check C. If I want to check, I will still check 30,000 into 3 by 5, 3 by 10, 30,000 into 2 by 10. So I will get 6,000 over here and I will get 9,000 over here. Here I will get 15,000. That's it. Then question number 122. Quickly read that question.
XYZ are partners in a firm. At the time of division of profit for the year, there was a dispute between the partners. Profit before interest on partners' loan was rupees 6,000 and Y determined interest at 24% per annum on his loan of rupees 80,000. There was no agreement on this point. Calculate the amount payable to X, Y, and Z respectively.
So, X and Y is that are the partners in the firm at the time of division of a partnership. There are A partners. The profit, they're simply saying what now? Actually, 80% is a loan. Y is determining to have 24%. There is no agreement is the keyword. If there is no agreement, interest on loan should be provided at the rate of 6%, not at the rate of 24%. So on that 80,000, I'm going to pay them 6%. What is on 80,000 into 6%? 4,800. That is fully for Y. Profit before interest on partner's loan. That's what they are asking. Profit before interest on partner's loan was 6,000. Okay. 6,000 was the profit. Okay. On that 6,000, okay, 4,800 interest go to Y itself. So the remaining is 1,200. That 1,200 should be divided among the partners in the, there is no agreement. It should be, there should be no agreement. It should be divided the partners in the ratio of equally, that is 1:1:1. So it will be 400, 400, 400. That is 400 for X, 400 for Y, 400 for Z. X is 400. Z is 400. Previously, Y is I need to pay 4,800. I will add this profit of 400 itself. So it will become 5,200 is a profit to X. And the calculated amount payable, total amount payable only they are asking. For Y, 4,800 is interest on loan and 400 is a share of profit. You will go. Otherwise, this 5,200 will be there. So my answer is option C. Read the next question.
G and C are partners. They are entitled for 9% interest on their capital contribution. The firm allowed rupees 54,000 towards interest on capital to partners. What will be the capital contributions of each partner if interest on Gunu's capital is rupees 13,500 more than the interest of Chinu's capital?
That's what they are asking. They're simply trying to give you a thing to make you the values which is more than what you need to provide, how the values are. That's what they are going to ask you. Just a minute, I got a problem. Yes, we'll start. They are asking this question. Here we will easily do it. G and C are two partners who are having 9% interest on the capital contribution. A firm is going to allow total contribution of 54,000 towards the interest on capital. What will be the capital contribution of each partner if Gunu's capital of 13,500 was more than the Chinu's capital? Interest on Gunu's capital, that's what the key point. If interest on Gunu's capital is 13,500 more than the interest on Chinu's capital, what will be their capital? That's what their question is. First, we'll let us understand. For G, if interest on Gunu's capital is 13,500, fine. More than interest on Chinu's capital, fine. First, Chinu's capital will be 9% of X. Okay, I don't know the X capital, so I will take that. On that, Gunu will be 9% of X plus 13,500. Whatever the capital plus 13,500, on that we will calculate that Gunu's value, which is equivalent to 54,000. Okay. This 9% we will convert it into 9 by 100. It will become 0.09x plus 0.09x plus 0.09 into 13,500 will give you 1215 equal to 54,000. Okay. 0.18x plus 1215 equal to 54,000. On that, 1.8x is equal to 54,000 minus 1215. What is 1215? 1215. If I subtract, it will become x is equal to 52785 divided by 0.18. So if I divide it by 1.18, it will become x is equal to 2,93,250. 2,93,250. This was the Chinnu's contribution. Chinnu's contribution is this value. Okay. This is 2,93,250. Then what they are asking? On that, we will calculate 54,000 is allowed towards the interest, and what will be the capital contribution of each partner if interest on Gunnu's capital is 13,500 more than interest on Chinnu's capital. Fine. Contribution of each partner if the interest of Gunnu's capital they are asking is 13,000. So basically the option given is completely different. Okay, option given is not related to that. Kindly change it. The answer is going to be 2,93,250. If they are going to ask for another partner, you will also add that 13,000, 2,93,250 plus 13,500 we will add. It will become 3,06,750 for Gunnu as well. So the options is wrong. Kindly change it. Next, read 124.
A, B, and C had capitals of rupees 50,000, rupees 40,000, and rupees 30,000 respectively for carrying on business in partnership. The firm's reported profit for the year was rupees 80,000. As per provision of the Indian Partnership Act 1932, find out the share of each partner in the above amount after taking into account that no interest has been provided on an advance by A of rupees 20,000 in addition to his capital contribution.
No amount has been provided. So we need to divide it on the basis of this 80,000. We need to divide. That's what the question is. Okay. So we will simply do it. Okay. Very simple. We will take the value 80,000 as there is no agreement between the partners. So they are having to provide the value. Interest on capital is not, the rate of interest on capital is not there. If interest on capital is not there, if you are not going to find out the value, it should be divided among the partners on the basis of the profit sharing ratio we will do. That's a one way. And another way, what we can calculate now, if there is no interest has been provided on an advance by 20,000. So we will start this. Here, the important key point is no interest has been provided on an advance by A of rupees 20,000. They say that as per the partnership deed, the share of each partner in the above on and after. In simple, there is no agreement. In case of no agreement, there will be 2 points. Profit or losses should be shared equally. And if there is any interest on loan, that should be at 6% per annum. Here, the word which no interest has been provided on advance by A is 20,000 what A has given the loan. On that, A has given the loan to partnership firm. On that value, firm is not even paid that interest because of the lack of the absence of partnership agreement. Now we need to pay by paying 20,000 into 6%. What is 20,000 into 6%? 1,200 I'm going to pay it to A. So A's account I'm going to put 1,200. This 1,200 how will pay? From my 80,000, I will subtract my 1,200. How much I will get? 80,000 minus 1,200, I will get 78,800. In the absence of partnership, it should be divided among the partners equally. So it is divided by 3. 78,800 divided by 3, it will become 26,266.66, approximately 26,267. Some person 26,266 and another person 26,266. That's what the value is. Or here it is 7. Here it is going to be 6. That's what the value. Okay, this is for A, this is for B, this is for C. But A is already, I need to pay 1,200. I will add that 1,200 over here. 26,267 plus 1,200 will give me 27,466 or 67. Okay, so my answer is option A, 2746 for partner A, 26,267 for partner B. This is an interesting question. Some key points is there. If you understand that, then only you can easily solve that problem. Okay. In this previous question, they have given that loan by giving the word on and advance, not on the word of interest on loan directly. So don't confuse on that. Read 125th question.
When a partner is given a guarantee by the other partner, loss on such guarantee will be borne by.
A loss on such guarantee will be borne by the partner who gave the guarantee. Very simple. Next, 126.
In the absence of an agreement, partners are entitled to
only interest on loans and advances. That's what the keyword is. Next, 127.
In the absence of any agreement, partners are liable to receive interest on their loans at
6%. Option C. Next.
goodwill brought in by incoming partner in cash for joining in a partnership firm is taken away by the old partners in their dash ratio.
Taken away by the old partners in the sacrificing ratio at the time of admission. Incoming partner, sacrificing. Admission, sacrificing. Outgoing partner, it is going to be in a form of gaining ratio. Next.
Weighted average method of calculating goodwill should be followed them.
When the profits are increasing trend or decreasing trend, we will follow that method. Either increasing or decreasing, we follow that.
X, Y, and Z are partners in a firm. At the time of division of profit for the year, there was dispute between the partners. Profit before interest on partners' capital was rupees 6,000, and Z demanded minimum profit of rupees 5,000 as his financial position was not good. However, there was no written agreement. Profits to be distributed to X, Y, and Z will be.
It should be distributed to all the persons in which ratio on the absence of agreement equally. What is the profit we are having? 6,000. This 6,000 will be divided to A. Sorry, we will divide it to X, to Y, we will divide it to Z on 2,000, 2,000, 2,000. So my answer is option C. Okay, 131.
A, B, and C were partners sharing profit and losses in the ratio of 3:2:1. A retired and goodwill of the firm is to be valued at rupees 24,000. What will be the treatment for goodwill?
What is the treatment of the goodwill? They are asking very simply. All the treatment of the goodwill will be adjusted either in a gaining ratio or in the to the partner's capital account. Very simple. At the time of goodwill not to be shown in the books of accounts. It means it should be adjusted among the partners in the gaining ratio or the sacrificing ratio. Answer is option B. Next.
A, B, and C are partners sharing profits and losses in the ratio 3:2:1. They decide to change their profit sharing ratio to 2:2:1. To give effort to this new profit sharing ratio, they decide to value the goodwill at rupees 30,000. Pass the necessary journal entry if goodwill not appearing in the old balance sheet and should not appear in the new balance sheet.
New balance sheet. In both the balance sheet, it should not be there. Then what I will do? Okay. First, I will divide this 330,000 in the old profit sharing ratio. Then I will divide the 30,000 in the ratio of new profit sharing ratio, that is 2:2:1. So 30,000 into 2 by 5 is 12,000. Okay, it will be 12,000. It will be 6,000. Okay, done now. Now, important point. First step, old point, that is rising of goodwill. The next point is return of goodwill. At the time of rising the goodwill, you will credit that value. At the time of writing of the goodwill, you will debit the value. Okay. Now come to a final part. Difference between debit and credit. Credit 3,000. Difference between credit and debit. Debit 2,000. Difference between credit and debit. Debit 1,000. What is a journal entry? C is capital. B is capital. A 2 A is capital. Value will be 3,000. 2,000. Sorry. C is for 1,000. B is for 2,000. That's it. Where you will get it? B is 2,000. C is 1,000. This 1,000. Option A is my answer. Everybody understood this rising of write-off concept? Next.
A, B, and C are
130.
partners sharing profits and losses in the ratio of 3:2:1. C retires on a decided date and goodwill of the firm is to be valued at rupees 60,000. Find the amount payable to retiring partner on account of goodwill.
C. Total value of the firm is 60,000. Out of it, C is going to come outside. C is going to be retired. So the ratio is 3:2:1. C share is 1/6. So we're calculating 1/6. 1/6 is nothing but 10,000. The amount of 10,000 needs to be given to retiring partners. Next.
A, B, and C are partners sharing profits in the ratio 2:2:1. On retirement of B, goodwill was valued as rupees 30,000. Find the contribution of A and C to compensate B.
I think so. We have already done. Suppose we will do 30,000 is the entire firm goodwill, out of which B is going to come out. The B value is 2:2:1, out of which B particular value is 2/5. Calculate 2/5. 30,000 into 2/5 will give you 12,000. This 12,000 needs to be divided by in the compensated by A and C in their existing ratio 2:1. So what is a 2:1? 2:1 is nothing but 8,000 and 4,000. My answer is option B. Next.
A, B, and C takes a joint life policy. After 5 years, B retires from the firm. Old profit sharing ratio is 2:2:1. After retirement, A and C decides to share profits equally. They had taken a joint life policy of rupees 2,50,000 with the surrender value of rupees 50,000. What will be the treatment in the partner's capital account on receiving the joint life policy amount? JLP amount in if joint life policy premium is fully charged to the revenue as and when paid.
We will do it in the ratio of surrender value. So surrender value, we will go and distribute to all partners. In which ratio? In an existing ratio. That existing ratio is nothing but an old ratio. That was an existing ratio. So my answer is surrender value is 50,000. So 50,000 will be credited to all the partners in the old ratio. That's it. Next, 136.
A, B, and C are partners sharing profit and losses in the ratio 6:3:3. They agree to take D into partnership for 1/8 share of profits. Find the new profit sharing ratio.
Right. D is agreeing to take for 1/8 share of profit. This is what holds. This is what new. So 1/8 is given. That's what the only one information I am having. So what I will do? Find the new profit sharing ratio they are asking, right? What is a remaining share? Remaining share of D. The remaining share of D is what? 7/8. The remaining share lies with the firm is 7/8. Okay. This is what the remaining share. On that remaining share, I will calculate old. Just a minute. What we will do? Old profit sharing ratio we will take. That is 6/12. On that, we will calculate the remaining share. The same way for A we have done. B 3/12 into 7/8. C 3/12 into 7/8. D is admitted for 1/8 into same to make we will calculate first A, B, C. So if I calculate 6 7s are 42, 12 8s are 96. 3 sounds are 21 by 96. 3 sounds are 21 by 96. To make the base 96, I will multiply the denominator by 12. In the same way, numerator by 12, it will become 12 by 96. The new ratio will as follows: 42 by 96, 21 by 96, 21 by 96. D will become 12 by 96. If I write it in the ratio, let's say it is in the form of 42 is to 21 is to 21 is to 12. So if I divide by 3, okay, 42 divided by 3, you will get 14. 21 divided by 3, 7. 21 divided by 3, 7. 12 divided by 4, 4. So my answer is option B. Option B is my answer. With this, the entire 36 questions will be easier for you hereafter. If you practice these 36 questions again, okay, I will tell you one more thing. Here, some key points I need to address. One of the important concept is workman compensation reserve. Let's say the workman compensation reserve is, let's say, somewhere around 90,000. Okay, already lies in my books and the liability side. Okay, on this 93,000, case 1 will be no adjustment is required. What you will do, you will divide this 90,000 into partners in their profit sharing ratio. You will divide to each partner in the profit sharing ratio. Case 2, only liable to pay only 60,000. Then in the case, you will take 90,000. Out of it, 60,000 is a liability to pay. So we will divide, we are left with 30,000. On that 30,000, we will divide it in the ratio of PSR. This is case 2. Then come to case 3. I am having a liability of, let's say, 1,60,000. If that was the case, out of which previously I have already created a liability of workman compensation reserve of 90,000 is still there. I still need to create 70,000, which is out of my packet. I'm going to do it. So what from that revaluation account, I will create from that revaluation amount, I will create this 70,000. This is going to be increased. This is going to be treated as revaluation loss. That revaluation loss, I'm going to put it in that 70,000. Okay, if liability increased, okay, there will be a concept of revaluation, right? What you will do in case of revaluation? If asset is increasing, what you will do? In journal entry, you will debit, right? Asset to revaluation. But in reality, in revaluation, you will credit it. In case of liability is decreased, you will credit it. If it is liability is going to increase, okay, liability is going to increase, you will debit it. And if the liability asset is going to decrease, you will debit it. So that's what. So here the liability is going to increase. So you are going to debit the revaluation account. Are you able to understand this 3 workman compensation reserve? Everybody? We'll go for module 5, lease accounting. We'll quickly do. Hereafter, it is only going to be a theory questions. Read that question quickly. I want Hari Krishnan to read the questions.
The person who undertake an agreement conveys to another person the rights to use in return for rent and asset for an agreed period of time.
Agreed period. Who will go this agreement? The lessor is a person who is given a right to another person to use it and to return it for rent. That is person is known as lessor. Then I want somebody to read the question quickly. Priyanka, read that question. Next question. Next question onwards quickly. Which type of lease expense is maintenance? I will read it myself. Which type of expense like maintenance, repairs, and taxes are borne by the lessor? These are the types of expense which is known as operating expense, operating lease expense. So it is an operating lease. Next, operating lease is a revocable contract. It is not a non-revocable. It is a revocable contract. A lease which is generally not cancelable covers full economic value life of an asset is known as finance lease. This is all the definitions. Okay. Which lease transfers substantial all the risk and rewards incident to the ownership of that asset. The entirely to transfer everything to that person is known as finance lease. These are the key words towards the financing lease problem. Okay, all the risk and rewards will be transferred substantially to that leasee or to the ownership of that asset is known as the finance lease. Then 142, short-term lease, which is often cancelable, which will have an option to cancel, revocable, that is known as operating lease. One difference between operating lease and financial lease is very simple. Operating lease is generally cancelable by the lease. But in financial lease, we could not able to do that. That is a simple meaning. Option C is your answer. Then we will go with branch accounts. Goods may be invoiced to a branch. It can be at cost. It can be at selling price. It can be at the invoice price. Anything I can do. So my answer is both A and B. 145. Cost of goods returned by the branch, which will have a following effect. Which will affect which are any goods which is returned by the branch. In the goods branch account, they will debit it. In the branch stock account, we will credit it. That's a twofold effect we will do. So it is going to be C. Okay. Next, 146. Assets and liabilities of a non-integral foreign operation should be converted whenever you come across with assets, whenever you come across with liabilities, whenever you're going for a foreign operation, we will record them in the closing exchange rate. Whatever the closing exchange rate is given, on that value, we will multiply and we will put the value in our balance sheet or our branch accounts. So my answer is option A. 147. If the goods are invoiced to the branch at cost, trading results of a branch can be ascertained by preparing either which method they will follow. They can prepare debtors method or stock and debtors method. Both the methods you can identify. So it will be option A or B, either C or D. That is your option. So under branch trading and profit and loss account method, what is the under branch trading and profit and loss account method? HO prepares profit and loss account. Yes. Each branch is treated as a separate entity. Yes. So the answer is option both A and B. 149. Income and expenses of NO4. That is not here only you studied, no. Non-integral financial operation. Non-integral financial operation is translated at average rate of approximate that actual exchange rate at the date of transaction. Both the values we will consider. If you know, have the clarity regarding this branch accounts and the foreign exchange transaction. Then 150th question we are having. We are going to hit 150 questions. All the following are the examples of monetary assets except trade payables is a monetary asset. Trade receivables is a monetary asset. But inventory here, it's not a monetary asset. Okay, it's not lying in a monetary asset. So it will be option B is your answer. Inventory, it will rise in the form of goods. Okay, so you congratulate yourself. You have done 150 questions. You have completed 6 to 7 modules. 150 questions, which is related to past exam question, which is taken from CA material, which is taken from CS material, which is taken from your e-bulletin, which is newly established. Everything we have covered it. Okay, which is some basic questions we have left it. Intentionally, we have left it because we want to restrict this to 200. Even this 200 questions, I have planned for only 3 to 3.5 hours, but it actually took me for 4.5 to 6 hours. Okay, so I put my entire 6 hours of an entire day for you to score you to make sure you get this 60 out of 60. That is, you make sure you get 30 out of 30. So it will be 15 into 2 marks. So it will be 30 out of 30. So I want everyone to be attentive for the next 15 questions. Next 50 questions is going to be a quick thing and we are going to complete it. We'll come to departmental accounting. The following is not on the basis of generally used by the departments on the case of interdepartmental transfer. Cost we will do. Cost plus profit method we will do. We will not do any variable cost method. So here the answer is variable cost. If an organization is interested in determining the separate departmental net profit, then simply they need to prepare the books of accounts separately. Separate set of books of accounts are kept by each department. Fine. Department accounting helps. Why there is a need for departmental accounting? Basically, it will help you to find out the gross profit of the each department or the net profits of the each department. Then it will be helpful for you to make a planning to control, and for that you can make a decisions. So it will be two things. So evaluations of trading results and effective planning and control on each department. So your answer is option C. Next question number 154. If department A transfers the goods to department B at a price 50% above the cost, what will be the amount of stock reserve of an unsold stock worth of rupees 90,000 of the department B? Very simple. 9,000 of that department B. 9,000 is an unsold stock, 50% above the cost. Unsold stock worth of 9,000 is there. On that, calculate 50%. On that, calculate the value 50%. How much you will get? How much you will get? 4,500 is the value you will get it. Okay, if A transfers the goods to department B at a price 50% above the cost, what will be the amount of stock reserve? Okay, fine. They are asking the stock reserve. They are not asking the entire value. So what I will do, 50% above the cost is nothing but 50 by 150 on sales. Okay, 50 by 150 on the sales. So rather, I will do in this 50 by 150 on sales. 50 by 150 on sales is nothing but 1 by 3 on sales. Unsold stock is given at 9,000. They are asking a stock reserve, no? So it is inclusive of selling price. This is a selling price of the unsold stock is given. From that, we need to remove the stock reserve. From that, I will calculate 1/3. If I calculate 1/3, it is only 3,000. 3,000 is your stock reserve. Remaining 6,000 is your cost of unsold stock. The cost of unsold stock is nothing but your closing stock. Everybody understood? So the answer is option A. Don't confuse by putting 4,500. Then 155. Goods and services may be charged by one department to another department at any price, market price, cost plus agreed percentage margin, anything. So it will be option C. 156. Administrative expenses are apportioned among the various departments on the basis of administrative expenses is based on that office related expenses. So it should be based, whether we'll check with time spent by the employees in each department, we may choose that value of asset, definitely not sales, definitely admin is not related. Of sales of each department will not do. Floor space, it is not related to floor space. So we will spend whatever the time spent by each and every employee related to the administration, we will divide it. So the answer is option A. 157. Mercer's XYZ departmental store having two departments, A and B. Mercer's XYZ paid rupees 4 lakh towards an interest on loan taken for the business. Please advise the basis of allocation of interest expense between the parties. How I can allocate that interest expense? That is, interest is taken on that loan. So it will, that interest on loan should not be calculated for each department because it is taken for a whole. We could not able to identify what is a profit of margin, what is a bifurcation they have contributed it. So we will not allocated that individual department because it will be get recognized in the combined P&L, it will get recognized. It will not recognize in the individual account. Like that, you may get another question. Like you are having a creditors, you are having a debtors, how I can bifurcate it? Kindly advise. Like this, you will get the question. Then 158. Which one of the following expense may not be apportioned amongst the department using any suitable basis? Don't think why I'm keeping this hands like this, because from morning itself I am facing towards the light. It is heat is generating highly. Which one of the expenses may not be proportioned amongst the departments using suitable basis? Okay, which expenses we will say carriage inward we will apportion easily between the expense. Labor welfare we will easily do. Rent expense we will easily do. Profit and sale of investment we may think we will not able to find the proportion on that value. It may be difficult for us, so we'll go with option B. Then we have done with departmental. The one more 3 to go. Insurance claim, higher purchases there. Then AS. I think so. That's it. 159. A plant worth rupees 40,000 has been insured for 30,000. The loss on account of fire was 25,000. What is the insurance company will bear? On the 30,000 only, I have insured for a total worth of 40,000. Into the company, fires is occurred for 25,000. What is the amount I will bear to a loss? So take a calculator and do 30,000 divided by 40,000 into 25,000. It will give you 18,750. So 18,750 will use the answer. Then goods costing 1 lakh were insured for 50,000, out of which 3/4 of the goods were destroyed by fire. The amount of claim for an average class they are asking. Very simple. We'll calculate on 1 lakh. We will calculate 3/4. What is a 3/4? It is 75,000. On the total 75,000, 50,000 was insured for that entirely. It is 1/3. Correct? It is 1/3. So we will calculate. Just a minute. Out of these goods, 3/4 of are destroyed by fire. Okay. Here, 1 lakh is a total value, out of which 50,000 is insured. Into the goods destroyed was 75,000. If you multiply 50,000 divided by 1 lakh into 75,000, if you put, you will get a value of 37,500. The answer is option A. Then question number 161. If the policy is without an average class, understand, without an average class, a claim for loss of, here change it to loss of stock. Change this to loss of stock will be lower of actual loss and sum assured. This is a direct formula which we are having. Lower of actual loss or sum assured or unsum assured will be there. Okay, option C is your answer. Then question number 162. Fire insurance claim will be limited to. This fire insurance claim will be limited to actual loss suffered, even though insured value of the goods may be higher. This will be a one thing. Proportion of the loss to the insured value bears to the total cost. That's what is nothing but an average class bar. So it will be 2-case scenario. So it will be option C. Then question number 163. Gross profit can be calculated. Here in this problem, gross profit is nothing but net profit plus insured standing charges. This is what the gross profit calculation will be if you want to find out the gross profit margin rate. So my answer is option A. Then the loss of profit normally covers the following items. It will cover loss of net profit and standing charges, any increased cost of working, that temporary expenses that we will take, and both A and B, both we will consider. So we'll go with both A and B. 165. The cost of salvage stock, that is yet to be the scrap items. The cost of the salvage stock must be credited to the trading account as it generates some revenue towards it and debited to the salvage. For every debit, you are having an equal and corresponding credit. So both A and B is my answer. Option C is my answer. Question number 166. What is standard turnover? Standard turnover is a definition which we are having. Is standard turnover is nothing but the turnover during that period in the 12 months immediately before the damage, which corresponds with the indemnity period. That's what the key point is. Here the word is indemnity should be there. Here the word before should be there, and it should be 12 months should be there, which is correspondingly equal with the indemnity period. Kindly understand this. Then last question under the insurance claim. Short sales for the purpose of loss of profit is nothing but the formula for short sales is nothing but adjusted standard turnover minus actual turnover. Okay. So AST minus AT, where I get it, adjusted annual turnover minus annual turnover, adjusted annual turnover minus adjusted standard turnover minus actual turnover. That's what my option. Option C is my answer. Then I will go for hire purchase. Another 32 sums to go. Okay, 32 questions to go. We will quickly do that. In the hire purchase system, interest charged by the vendor is calculated on the basis of interest is calculated on always the interest is calculated on the outstanding value. It will be calculated on the outstanding cash price. Next, question number 169. Excess of higher purchase price over cash purchase price. HPP is higher than CP. The difference is known as interest. The difference is known as interest. It is higher purchase price is nothing but what? It is an inclusive of interest. If I remove the cash price of an asset, the remaining part is known as interest. In higher purchase system, cash price plus interest is equal to, now only I speak, it is higher purchase price. So higher purchase price of an asset. The amount paid at the time of entering the hire purchase transaction for the goods purchased is known as down payment. Suppose the car worth is 10 lakh per. Okay, out of which what I am saying, currently I will have 2 lakh, so I am paying you 2 lakh and remaining 8 lakh will go for an EMI, right? That EMI is known as hire purchase system. So this 2 lakh, what you are paying, we will say it is a down payment. Next question number 172. The ownership of the goods purchased under hire purchase is transferred only when all the outstanding balances is paid in full. Then only the ownership will transfer. Immediately the asset or the goods will immediately transfer. When the ownership agreement will get transferred, it will be transferred only on paying the outstanding balances. Then question number 173. Depreciation on hire purchase asset is claimed by who claimed it? The hire purchaser can claim. Who is actually having that asset, that person can claim. Not an issue. 174. Interesting one. A purchase machinery or hire purchase system for a cash of 5 lakh to be paid at 7,800 as a cash down payment and the balance of 3 equal installments of 2 lakh interest, each interest to be at 20% per annum and the amount of interest payable in the second installment they are asking. This is an interesting question which they have asked nearly for 2 to 3 times in your past examination. And if you come across your MCQs as well, this question has been handpicked by me in your CMA study mat. In your CMA study mat, you are having this, CMA study mat only, yeah. CMA study mat in higher purchase system, you are having this. The same question is asked in CA also. The same question has been asked in 2008, 2009, 2010, 2012 higher purchase system based on that advanced accounting in CMA Inter as well. So I have handpicked that for you. So we are going to solve that. Be understand on that. Everybody ready? Yes. First, we'll calculate the cash price. What is the cash price given? Cash price given is 5 lakh. Out of which 5 lakh, what is the down payment? Down payment I have done 78,700. So 78,700 if you subtract, what is the value? Understand this question carefully. 78,700 minus 5 lakh will give you 4,21,300. 4,21,300. This is a amount which we are having at the end of the first year. In the first year, I need to pay a outstanding balance of 4,21,300. I need to pay a 20% as an interest. Calculate 20%. 4,21,300 into 20% will give you 84,260. Will give you 84,260. That 84,260, I should pay it as a first. This is an interest component. Okay, interest component should be paid. So in the, if I less the principal value, how I can find the principal value? What is the total value I'm paying? 2 lakh is the total value I'm paying. Out of which my 84,260 is only the interest component. If I subtract 2 lakh minus 84,260, I will get 1,15,740. This is a principal amount payable at the end of first year. Okay, I will subtract the value. If I subtract the value, I will get 3,05,560. 3,05,560. So from that value is the second year outstanding value. On that second year outstanding value, we need to calculate the interest payable only. They are asking interest payable for the second year. How you can calculate? 3,05,560 into 20%. What is the value? 3,05,560 into 20%. That is 61,112. 61,112. So my answer is 61,112. Understood? 25 questions to go. Pull up your socks and get ready for the last 25 questions. Which method of recording the hire purchase transaction is not used in the hire vendor's books? Cash price method we will not do. Remaining two methods, sales method or interest suspense method we will do. Surely we will do. Next, under installment payment system, ownership of goods. Under installment payment of system, ownership is goods is transferred at the time of making the final payment or at the time of making a last payment. Under installment payment system, the ownership of the goods is transferred at the time of making. No, here the answer is the transfer at the time of payment of a last installment only. So the answer is A. Kindly change it to A. Okay. It is not transferred at the signing of contract. Installment payment, we will only transfer the ownership at the end of the year. 117, last question. The total interest on hire purchased goods is a difference between simply hire purchase price and the contract price. Very simple part. If I want to total interest, HPP minus CP. If I want CP, TI plus HPP. Okay, if I want HPP, it is nothing but TI plus CP. That's it. This three, if you remember, you can easily do it. Finally, we came to our end of our chapter 6, accounting standards. This accounting standards, somewhere around 22 questions is there. And I have kept that last question and one more question in leasing should be there, especially for you, those who are attending the live. You are going to gain this because some of them are watching this video through YouTube, maybe due to the lengthier consumption. They may skip that part. Why I want to study that accounting standard. So those who are attending this live, that I have kept the 2 accounting numerical problems, which you can also expect and which may give you good conceptual clarity regarding those lease accounting and regarding those AS22 accounting for income taxes on income. Okay, we will do 178. Read that question. Somebody read that question quickly. Almost 6 hours we are there. Quickly complete that.
As per AS 10, revised property, plant and equipment, which of the following cost is not included in the carrying amount of an item of PPE?
Carrying amount of item of PPE, we calculate all the value cost of site. Cost of reallocating will not enter. Installation assembly cost we will enter. Initial delivery and handling charges related to the cost of the item, we will include it in the cost itself. Which is not included is their question. So it will be only cost of relocating. Okay. Next, 179.
Classification of lease as operating or finance is done on the following date.
Classification of lease as an operating or a finance is done on the following date of a lease agreement or the date of commitment by the parties, whichever is earlier. So the option is at the earlier of A and B. Next.
Which of the following statement is correct? Entire exchange gain is reduced from the cost of the qualifying asset Entire exchange loss is added to the cost of qualifying asset. No adjustment
Fine.
is done for exchange loss while computing cost of qualifying asset. None of the above.
Yeah, the word which they have used in AS16 borrowing cost is that qualifying asset. What we are having, they use the borrowing cost. They are not use the word exchange loss. So the answer will be no adjustment is done for the exchange loss while computing the cost of qualifying asset. Next, 181.
As per AS16, all the following are qualifying assets except
Except qualifying asset, there is some general definition for the qualifying asset. After watching the video or before watching the video, go and understand what is meant by a qualifying asset, then come to this question and then understand this. Due to time constraint, it is already gone to 6 hours. So due to time constraint, I'm going to reduce that explanation part for the last 10, which is requires, I will surely explain you. So the answer will be asset those are ready for sale. It is not even a qualifying asset, which needs to be there, which needs to be go through the production process. If it is a ready for sale, it is merely a trading activity. It's not in a purchasing activity. It is not a production activity. So it is not a qualifying asset. Next.
unlimited.
Now that's what the question. That's what the question I have given to you. This 182. Mark this. You learn that unearned finance lease income concept really easy. Read that question.
N Limited has entered into lease agreement for machinery from S Limited for 10 years for rupees 1 lakh per year. Guaranteed scrap value of machinery after 12 years is 0.5 lakhs. Unguaranteed scrap value is 0.2 lakhs. Present value of rupees 1 lakh for 10 years is 7 lakh. Present value for 0.5 lakh after 15 years is 0.18 lakh. And rupees 0.2 lakh is 0.07 lakhs. Calculate unearned finance income for S Limited.
Fine. Unearned finance lease. Okay. Here, strike all the 15 years and change it to 10 years. Okay. Change it to 10 years. First, what is UEFI? That is unearned finance income. It is nothing but gross investment minus net investment. Gross investment minus net investment is a basic. To identify the gross investment. Okay, to identify gross investment, it is nothing but lease payment. First component will be my lease payment. What is the total lease payment I paid? Then GRB. Then next is UGRB. That is GRB is nothing but guaranteed value and unguaranteed scrap value or unguaranteed realizable value. How I calculate the lease payment? First, I will calculate the lease payment by taking 1 lakh per year for 10 years. So it is 1 lakh into 10 years. It is going to be 10 lakh. Plus, what is the GRV they have given? Guaranteed scrap value of the machinery for 10 years is 0.5 plus 0.5 lakhs. Plus unguaranteed scrap value is 0.2 plus 0.2. So it is totally going to be 10.7 lakh. Correct. Here the value I will write 10.7 lakh minus. I'll change it to other color. What is a net investment? That's a key point here. Okay. The net investment we need to calculate. How I can calculate? It is nothing but what is the here from here the point. The present value of this 1 lakh for the next 10 years is 7 lakh after discounting. Present value of this 1 lakh rupees of today till the next period of 10 years, every 1 lakh for each year, that discounted value of the current year is only 7 lakh. Of the current period, present value is 7 lakh. And the present value of 0.5 lakh is after 10 years, now that guarantee value. After 10 years, now present value is 0.18 lakh. Okay. And 0.2 lakhs value, which is currently presented at 0.07 lakh. So net investment of 7 lakh plus 0.2 lakhs plus 0.07 lakhs. If I add everything, 0.07 plus 0.2 plus 7, it will become 7.27 lakh. So if I add 7.27 lakh, if I subtract and if I get the answer, my 10.7 minus 7.27, which will give you 3.43 lakhs. My answer is 3.43, approximately 3.45. I will go with option A. Everybody understood why there is a slight error? Because that we don't have a discounting factor here. We need to identify a discounting factor, then only we need to find out. Then it will become a lengthier process. For 2 marks, this computation is done. You can easily do. Okay, whenever you come across with this question, you will finally calculate the present value of all the 7 lakh plus 0.2 plus 0.07. And sorry, wait, what I have done here? I have done something fishy here. 0.5 lakh after 10 years is 0.18, right? Why have you put that 0.18? So 0.18 and 0.07. So 0.18 plus 0.07 will get 0.25 plus 7 will get 7.25. Okay, 7.25 lakh. If I add 7.25 lakh over here, and now I think so, I will get the answer. You will get exactly 3.45. Okay. Don't commit any single mistake, because due to some lack of clarity over the question, I misunderstood that question. Next, question number 183, easy. If the amount eligible for capitalization in case of inventory for AS15 is 12, the cost of inventory, you should know, cost of inventory should be valued at cost and net realizable value, whichever is lower. What is the cost over here? 40,000. What is the net realizable value? 45,000. Okay, so what is it should be realized over the cost. What is the difference? The difference is only 5,000. What amount can be capitalized as a part of inventory cost? As a part of inventory cost, 5,000 should be capitalized. Next, as per AS1, recognize fundamental accounting assumption. As you know, there are 3 fundamental accounting assumptions. What are those 3 fundamental accounting assumptions? First one, it should be a going concern. Then it should be a accrual. Then it should be a going concern, accrual, and consistency. Yeah, which one? Going concern, accrual, and consistency. Think so. The 3 basic fundamental accounting assumptions are going concern, accrual basis, and consistency. So my answer is option A, that is 3. Next, 185, 15 more questions to go. What is an accounting treatment of a government grant refundable, which was nature of promoter's contribution? This promoter's contribution, previously it was capitalized. Now we need to reduce from the capital reserve. So the answer is reduce from the capital reserve. A government grant that becomes refundable, it will be treated as an extraordinary item. It will not be, it will be treated as a separate item, which is not in the ordinary course of the business, which is not expected to be there. So it will be treated as an extraordinary item. 187, AS12, accounting for government grants is not applicable for the following. Government grant is something which has been provided by the government at the government for the benefit of the government, for the benefit of the people. So accounting for government grants is not applicable for the following. Subsidies from the government, yes, it is applicable. Cash incentive from the government, yes, it is applicable. Government participation in the ownership of the company. It means when it comes to government company, 51%, as even it is a government, why they need to get a grants over there? So whenever government participation in the form of equity, the grant is not there. Duty drawback of the government in customs duty, we are having a grant. So option C is your answer. Next question number 188. At the what value government grant is recorded in the books in case of non-monetary asset given of free of cost? Any non-monetary asset given at the free of cost, what you will do? You will record them at the nominal value. Okay, whatever the nominal value, the purchase value, we will record it. 189. As per AS10, revised property, plant and equipment. Whenever you come across with AS10, you should write the words in brackets revised. That is important. Okay, an enterprise holding an investment property should be valued that investment property at a cost. That's it. It should be at the cost. 190. Following is not a government grant. Following is not a government grant. Purchase of diesel by Indian Railways. Why? It is a normal purchase, normal day-to-day revenue expense. It is not a government grant. Amount from government for establishing a setup in a backward area. They will provide a grant. That is a government grant. Land from Rajasthan government at a concessional rate. Government is providing a land at a concessional rate. That some concessional rate apart from that original value, difference between the original value and the concessional rate is known as the government grant. Subsidies from the ministry for an external affairs to purchase from Indian vendor. That is also a subsidy. It is also a government grant. So the answer is option A. Last 10 questions to go. Pull up your socks and we will do it. Which one of the following would not lead to lease being classified as finance lease? In case of finance lease, they are asking not lead to classified as finance lease. In case of finance lease, whenever at the end of the year, the leasee can take over the asset. Whenever at the time of lease contract, whenever the fair value has been paid, the asset can be taken over by the lease. That agreement, that kind of leasing is known as finance lease. And whenever the lease is payable at a minimum lease payments and the person is going to take over the asset, that is known as a fair value we are speaking. And the person who have an option to purchase that asset at the lower value from that market value, that is a fair value, they can also another option they are having. So these are the options which we are having as a finance lease. When the title is not transferred, but the lease term in the major part of economic benefit of lines is there as a finance lease. The lease has option to, the leasee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date of his option becomes exercisable. Yes, that option is also available. The lease does not transfer substantial all the risk and reward students. No, they will transfer. So this will be false. Remaining everything will be true. At inception, the lease of the present value of a minimum lease payments amounts to at least substantially all the fair value of the lead asset. Whenever after present value, it comes to 7,99,800. Whenever the finance leased asset, the fair value of the lease asset, let's say 8,10,000. So the minimum lease payment is there. So we will easily convert them as a finance lease. So my answer is option C. Last 8 questions to go. In India, accounting standards are governed by ICAI, Institute of Chartered Accountants of India. 193. Interesting question, important question for your matter. Entity X purchased fixed asset of 160 crores. Fine, we will read the question, we will go for pen paper mode. Purchase asset for useful life of 10 years. Fine. Government provided a grant of 60,000. GG, government grant 60,000. So my value is going to be only 100 crores. After 4 years, entity has refunded a grant of 20 crores due to non-fulfillment of some condition. Kindly provide amount of depreciation to be charged for year 5. Very simple. 100 is there. So it is divided for 10 years. So they say company follow SLM basis. For every year, I'm going to charge 10 crores. Okay. Every year I'm going to charge 10 crores. So it is for 4 years. They are asking for year 5. So till year 4, 40 crores is gone. How 10 crores into 4 is 40 crores is gone. So from that 100 crores, I will subtract 40 crores. I will end up in 60 crores. But due to non-fulfillment, I need to pay 20 crores. So my asset will automatically increase by 20 crores because previously 60 crores of what I reduced as my cost, right? So it will become increase as 80 crores. 4 years is gone. So out of 10 years, 4 years is gone. How many years I am left with? 6 years I am left with. Again, I'm going to do an SLM basis. 6 years. If I do 80 by 6, you will get 13.33 crores for each year. So they are asking year 5. Year 5 is 13.33 crores. My answer is option C. Understood. Last 6 questions. The IRDA issued a circular under Dash of Insurance Act which mandates the insurers to comply with the Ind AS. That's a key point. With the Ind AS, with an implementation to roadmap to issue MCA. It is merely nothing but section 34. Don't kindly remember this section. Okay, insurers to comply with Ind AS section 34. What is the full form of GAP? It is generally accepted accounting principles. Generally accepted accounting principles. Option A is my answer. Full form of IFRS. IFRS is nothing but International Financial Reporting Standards. This and all, this is a converged form of Ind AS is taken from the IFRS only. IFRS, they have a foreign accounting system, foreign accounting standards. From that International Financial Reporting Standards, we have converted to that Indian system, Indian accounting basis, Indian accounting business activities. We have taken, we are down to have copycat, no. So what we will do, we will remove some if and buts, we will insert some and or and then we will insert some, we will extract. So this is known as carve-ins or carve-outs. That's known as Ind AS, that International Financial Reporting Standards. That International Financial Reporting Standards. Option B is your answer. Last 3 to go. Come on. It is essential to standardize the accounting principles and policies in order to ensure everything. Transparency, consistency, comparability. That's what the accounting principles and policies is there. So my answer is all the 3, option D. Last 3 to go. According to AS1, which one of the following is true regarding those accounting policies? Which is true, they are asking. Okay. They must be disclosed only in the financial statement. False. They should be disclosed at only one place in the financial statement, not only in the financial statement. It can be in the prepare in the annual report, they may prepare in the board report, anything they will do. They should be consistently applied. Yes, they should consistently apply the same thing. They can be changed without any notice. No, they cannot change without any notice. They should change with the notice. They are optional and are not necessarily disclosed. No, AS1, whatever is required to be disclosed, it's required to be disclosed. It is not an option. It is a mandatory thing. So it will be a false. My answer is option B. 199. Entity A received a government grant of 500 crores on 1/10/2022 on an investment capital asset having a useful life of 10 years. As on 31/3/2023, no amount should be capitalized in the books of accounts. Not even any single penny has been capitalized in the books of accounts. Where no, books as that asset was not ready to use. Fine. What should be the amount should be credited in the statement of profit and loss of a deferred government grant account. Whenever deferred government will grant to picture, whenever the total amount has got capitalized on year basis, some portion of an amount will be charged to the profit and loss account to defer that value. Then only the value should be there in a P&L account. I not even capitalize the value of the asset, not in my books of accounts. Then how in my P&L it will be there? So my answer will be 0. Last 200 question I have taken for you, especially from AS22, and picked a question for you to understand the DTA or DTL. Very simple. Depreciation as per accounting records is how much? 2 lakh. Depreciation as per tax records is how much? 5 lakh. Due to tax records, I am having more value of depreciation. Due to in accounting records, I am having a less value of depreciation. There is an adequate evidence for future profit sufficiency. In future, I may get a profits. Okay, in future, I may have a good source of evidence that to acknowledge it, I may get a future profit. They are asking how much deferred tax or liability should be recognized as a transition adjustment when the tax rate is 45%. Very simply, I will do. Take tax records, depreciation as per tax records, subtract depreciation as per accounting records. Give me a value. 5 lakh minus 2 lakh. What is the value? 3 lakh. Okay. I will give you one more pre-point. Suppose in your examination, they may give you preliminary expenses written off. Like this, any kind of question. We will subtract that kind of value of preliminary expenses from this 3 lakh and then charge 45%. In this question, there is no requirement of that part. So on that, we will directly charge 45%. Calculate 3 lakh into 45%. This 1,35,000. Okay. 1,35,000. Now it's a matter of whether DTA or DTL. In simple, they are asking there is an adequate evidence of future profit sufficiency. So in future, I may get a profit. At the time, I need to pay a tax so that I will create a DTL. deferred tax liability because I have a liability to pay in the future, so that I will prepare DTL. So the answer will be deferred tax liability 1,35,000. This is an hand-picked question for you, which you can expect in your examination. You may or may not. Okay, with this 200 questions, you have successfully completed those 200 questions. Congratulate yourself. You have done this. You have spent almost 5 to 6 hours of learning process to understand this 200 MCQs. In the 200 MCQs, you may learn some theory questions related to few concepts, 10 to 20 to 50 concepts you have learned theory based, and remaining 100 questions, you may get a practical plus theory oriented approach, how you can understand, how you can do, what is a calculator trick, what you need to do, how you can able to identify that question in your examination, where you can commit a mistake. Even in some of the questions, I have myself committed a mistake due to lacking of that understanding of that question or reading the question not correctly. So make sure in that 30, whatever the reading time you will get, know that 15 minutes of your reading time is going to be a huge thing if you done this 200 MCQs, which will save you that 30 marks, which will save you, make you pass, and which will make you to get an exemption. Mark my words, on that examination day, you come and tell us, sir, this 200 questions, from that minimum 10 to 12 questions is there. I have attended. Remaining 3 questions, you have given some conceptual clarity. With that, I have attended. I am expecting 15 out of 15. Some students may tell, due to some practices, some of the students may tell 13 out of 15. Everything on the result day by MCQs, by our exam oriented class, which we have already uploaded for the previous attempt. That's still accounting is the universal thing, which is not going to change till December 23. If you have this, you can score 60 plus marks. I will guarantee you. Okay, so make sure you are watching this. This video will who have been watching this video in a YouTube in a very soon. So share to your friends. Do like, share, and subscribe to our channel, and do comment below this sharing what you are subscribing to your friends, which motivate us to do more and more kind of free sessions for you, for the benefit of the students, so that they can score a pass mark, so that many of them will score an exemption. My aim is to score all 4 papers exemption in intermediate. That's a simple thing. I am working towards that. I want everyone to works towards that 60 marks for in every paper, so that you have a good conceptual clarity with good amount of exam oriented approach will be there. And with this signing off of Sudarshan from Hari Academy, thank you. Have a nice day. And finally, don't forget to like, share, and subscribe to our YouTube channel.